And good morning. So, woke up a little bit late this morning, but that's pretty okay for me. Actually, I feel good. I figure if you need sleep, you get it, right? I'm pretty. You need to be aware of yourself. Anyway, so the first thing out of the box this morning was we had the initial jobless claims, which is this big spike here at 7:30. I wasn't for it. I have a strategy that I've been playing with, which would have worked perfectly this morning. I'll review that later. Anyway, so the overnight is once again a huge up move. Look at where the hell we are here. Well, not a huge up move, but a little opening swing here and then consolidate till about London and up we go. And then this latest move is on the jobs number right here at 7:30. We are there is the only other numbers out this morning. Well, there's an Atlanta Fed GDP, something or another release, but not any kind of an important speaker or anything at 11. And then at 12:01 is the 30-year bond auction. And 15:30 is the Fed balance sheet. So any times that I speak of or that are on my charts is all Central Standard Time, just FYI. I think I'll put that in the description, actually. So there we are. And we were just right on settle, and interestingly enough, we were right on overnight VPOC, overnight mid settlement, and overnight VWAP, all in a pile, and developing valuary high, actually, all in a pile, going into that number, and then kabam. Pretty amazing, huh? So, well, the first thing we need to look at is where we're going to be and what opening type we're looking to have, so that we go back to Bookmap here, so that we can set our column here, which will receive the statistics associated with the price levels. These price levels are pushed from Bookmap. Right now, this is from yesterday. This is just a note for myself, which I set like this. I just type it in there, and that's so that I can just look at this screen. Like 6 weeks from now, I can look at the screen snap and go, oh, this was a higher opening range. And I know that. So what we're going to determine now is where the likely open will be in relationship to the previous RTH period close and previous RTH period range. That determines the opening type for the statistics that we pull from IRT. And so we are going to be, here is settle and mid and all those things down here and close. So we're going to open higher than close, but within range, because this column Get over here where I can show you the whole thing, maybe. Yeah, okay. This is the RTH volume profile. So this is yesterday's volume RTH period. This is the full session volume profile, which is started at 1700 last night. So this is the trading session, the current auction that we're in. This is Delta for RTH. This is the chart volume profile, which is a bookmap thing that just plots what data you see on the left here on the chart. So here is yesterday's range in the RTH. We're obviously going to open within that. And we're higher than close. So we're looking higher in range would be the opening type. And then we go back to our, IRT here and to this TLab column. This is the statistics study. And you see that there are only 4 types, right? There's only 4 open types. There can only be 4 open types by the definition. There is higher out of range, higher in range, lower in range, lower out of range. That's it. And the only criteria that this chart or this study looks at and is indicative of any good statistic analysis, you can't have 15 different variables. That doesn't work. Because you have to be sure you're always comparing apples and apples. So this has got 4 possibilities. This is a gap down, by the way. That's a gap up, obviously. So here's where we're going to open today. This study looks at 2005 days. Of these 2005 historical days, 591 of them have opened higher in range, which is 29.5%. Of these 529 days, this is the number of days which price in the upcoming RTH period revisited or tagged out, however you want to call it, the overnight VPOC. And that percentage of that is, of these 591 days, it is 83.2% of the days. So 83.2. And then we go back to the bookmap. We go to the overnight volume point of control. And we put in 83.2. Boop, and that's all there is to it. And I'll do that for the rest of them. Let's look at the mid, which is usually typically second highest, and that's 77.8. I got to wind this up a little bit because the mid is covered up, so that's 77.8% of the time. So how likely do you suppose it's going to be that we're going to get those two statistics pretty quickly? The overnight high is another one, and that's 74.5% of the time. We take that one out. And I'll continue to do this now for the other meaningful, numbers that I see here. And I don't put them all because, why? Overnight low is 50.6% of the time. So we get down here to the overnight low, and that is 58.6% of the time that is hit. Now, previous RTH low, that's usually another significant one. Where did that go? But it isn't today. Previous low is 37.1. So this will tell you, this will give you an idea here. Oops, 37.1 about these statistics. They are just the statistics around the opening type, and they are not set in stone targets by any stretch, right? They are just the statistics involved. So what the hell is going on? So I've got it wound down so far it won't go where it's supposed to go, I guess. Let me get this fixed. It's driving me crazy here. Short trip, I realize. So this goes up there. This goes here. And now these don't seem to be wanting to play correctly, so that's irritating me. There we go. Wound in too tight. It's the overlapping prices. Okay, so obviously there is, if price comes down through the previous close and gets to the overnight low, it's going to go through the previous RTH flow, right? But the statistics wouldn't suggest that. Now, this is a naked volume point of control, which I input at the end of every day. This is where this is where yesterday's VPOC was when we closed. And that changed after 3 o'clock, actually. So that was kind of interesting. So anyway, that's how the statistics work, and they're entered manually by me on purpose so I can see where they go. Excuse me. Sorry about that. So that's how the statistics work. And then we have the somewhere my mouse keeps hiding. There we go. Then we have the micro composite chart, which is this one. And it is just daily RTH session bars. And I draw a volume profile around those bars which have overlapping price. This was a gap and an outlier. Then this one was a gap and an outlier. Then this day came in and traded back and forth. So that enabled me to start a new new micro composite here. By the nature of having the profile around it, you get the VPOC. So the VPOC for the micro composite MCVPOC is 5240. You see this where we're trading now. And these green lines are the high volume nodes of this micro composite volume profile. They are pushed automatically to Bookmap, as are the price levels up here. This is the volume profile for all of the days that are encompassed in the micro composite, and I forget how many days it is. Well, actually, we can look how many days that is. Oh, view period, it's 120 days. So you can set that wherever you want. That's this gray period over here. That's the volume profile for all 120 days added together. So you see that we're, and ironically, or if you'll notice, we're at the VPOC of the macro perhaps, or no, I guess it would be the volume profile of the 120 days for this period. We're just below that VPOC. So that's that. We'll go back over here, and we have these in place. This is the column where I put in the micro composite things. This was a previous VPOC that was micro composite that I changed the text from from red to yellow, so that to black. The current one is now red. Previous one is now black, so I can kind of tell what's going on. These are the high volume nodes that are pushed. There's no indicators on any of my charts. There is only the VWAP. In this case, that's the ETH. There's one for RTH. This brighter or darker yellow here is the POC for the full for the RTH session, which is here. And that changed. I can see that right now. This is the POC for the full session. And then there's a mid somewhere around here, right there. And that's only for the RTH session. And that's the VWAP for the RTH session. That's the only indicators or lines on my charts, except for, and that's both charts. That's both the RTH and Bookmap. I think that this is incorrect. This, you see, was the POC at, why would that change? Doesn't make any sense that could change, because we are not in a new RTH period yet, unless it's plotted up here to settlement. That's interesting. I'll have to check that out. In my opinion, this is the NVPOC from the close. Also developing value area low for the full session. So that's an interesting scenario here. And that's what IRT is saying. This column is not pushed as we just discussed. This one is. All right. So the next then will be the important to know about these levels. They're not mystical or magical. They are just the POC, for example, is the price at which the most contracts traded in the session, period. Nothing more, nothing less. This is the number. In other words, this is the price, 51, whatever that is, 31 half is the price at which the most contracts have traded in the full session since 1700 last night so far. The minute this number at 3176 changes, the minute that one of these others is 3177, that's where that yellow line will go, period. That's all there is to it. Somewhere around here, the IBs high and low, wherever they went, here's one, IB low and IB high, also are nothing magical. They are the price at which they're the high and low of the first 1 hour of the RTH trading session. That's all. And they migrate up and down, respectively, as the price moves in that first hour. And then at 0930, they don't move anymore. And that's all there is to that. So, and the rest of these are self-explanatory. Developing value area high. That's a little bit, maybe requires it. The DVH, VAH is the developing value area high. That's for the current auction. That's for this session that's happening now. Then you'll see somewhere around here. Well, there's one, value area high without the developing. That is for the previous RTH session. So there we are. Now we will open up the, I'll show you how the trading package is activated. Now, that's the multi-brackets. This is my 2-lot risk-neutral trading package. Both contract stops, 12 ticks. The first take profit or scale, risk-neutral scale, is at 12 ticks positive. Then this is the runner. You can trade as many of these packages as your risk tolerance and account allows, but if you trade them in this grouping or this particular individual package, then you have the risk neutral, and this falls in line with some thinking of the TLab and also definitely myself. So that's the risk neutral package, and then I have to activate the trade control panel here on Bookmap and make sure that it's set to DOM and that it's 2 lots, and that it has been activated, which it has. A word about the trading types. I trade with the DOM only rather than chart and both, because if you see this little line, if you see this faint line here, inside the mouse changes to a $sign and outside it's just a big arrow. If you have both or chart trading activated, if you click in here someplace, you're going to have sent a trade, perhaps not in meaning to. And I have actually done that in error by trying to grab and move a target and been on the wrong side of that line accidentally, or missed the line and been on the wrong side of it and entered a position I didn't want. So what I do, because I execute all my positions or initiate all my positions with my keyboard by hotkey. So I then only need to manipulate the targets, or in case of trade management, bring the stop together with a mouse, and I do that on the DOM. So that's the story about that. Another factor of the risk-neutral trading package. For example, if I was going to enter here at 70 and I was targeting the VPOC on a short, for example, for some reason that was a vetted trade of mine, or a predetermined positive edge trade setup, I must have 3 points, or I must have that first risk-neutral scale with no obstacles in the middle. So in other words, this would be fine because it's 70 to 30, right? So that's 10 points. If there was something here, developing value area high was up here within 3 points, I couldn't take it because that's an obstacle ahead of my original target, whichever that target may be. And that's how that works. Again, the beautiful part about the risk neutral is that once you hit that scale, it's a huge psychological benefit because all the stress is off. The worst that can possibly happen to you at that point to the trade is a scratch, unless you're a moron and you move your stop away from entry, which who the hell would do that, right? So that's how that works. I think that's covered both or all three of those. And now I got to get ready for my post to the TLab, which I do every day. And I'll be right back. Discuss that in a second. All right. So the TLab is a the mouse go. There we go. Make sure I got my timestamp storage driving me nuts. 23. I'll wait for that time to come up there. Okay. So the TLab is a bookmap Discord chat room started by a fellow named Tom T. It's actually called the Traders Lab. It's completely free. You do not have to be a subscriber to Bookmap. And from my point of view, with lots of years of experience here around the markets, it's the only place I would recommend, and by extension, and because it's the only, Tom, I think, is one of the few real people, real traders on the internet who's generally interested in helping people become better traders or learn to trade. He has, and I say that because there is nothing for sale. He's not trying to pimp you for mentoring or join my goddamn chat room or, buy my indicator this or any of that. And I cannot say the same for any other presenter on Bookmap. And I can't say the same for any other, person that I've heard, or what do you call them? Influencer, I don't know, whatever you call them, people on the internet or on YouTube. I haven't heard that same thing from anyone. And I mean anyone. Even FT71 was all, he gave a lot of his time and did that trader buddy, I think, for over 10 or 12 years, which was great. But he was always trying to sell his brokerage or do something else, So he had an ulterior motive there. Tom has none, unless he owns Bookmap and doesn't say anything about it. He does not have. So it's the link to that description, or to that Bookmap Discord server, is in the description of this stream. Of course, you have to sign up for the Discord server, well, I mean, how the hell are you going to get there if you don't? But the rest of it's free. There's like 60 PDFs, continual dialogue from Tom and others. Most of the people in there, or at least the ones that talk a lot, are pretty experienced traders and successful at it. It's not like some bunch of 12-year-olds on Reddit or whatever else, or Me Too or Me Trade or We Trade or whatever the hell that thing is, phone app or something. It's none of that crap. It's a professional approach. Tom's been trading for 45 years successfully. He has excellent risk. He understands what trading as a business really is, and that's really important, which brings me to that discussion here, which I will put my little timestampy thing over there. My eyes are bad. Really disappointing. I don't know what to do about it. So trading as a business is completely different than pretty much anything that you see anywhere or that anybody talks about. It is a business of statistics and probabilities. That's what trading as a business really is. And you can make it your own business, and it takes work and discipline, and you have to be extremely risk aware, just like a business. You watch your costs, you have a plan, you only execute your plan. That's how trading as a business can be successful. That's what separates the 92 or 3, the 2 or 3% of the traders from the 94 or 5 or whatever it is that fail. And the way it works is very simple. You identify a setup, take one setup at a time with specific criteria and a trigger. You capture a minimum statistically significant data set of samples of that particular setup and criteria. And I think general wisdom says about 50 samples. And then mathematically, you determine if that setup and those criteria have a positive expectancy or edge or positive probability or whatever word you want to use for that or not. And if they do, then your job as a trader is to take every one of those trades that presents itself to you in the market, with this bearing in mind that it has specific criteria and rules around it. In other words, it has to have the same, whatever rules you set up, context, the stop has to remain the same. The risk neutral scale has to remain the same. The target could conceivably change, but even that should stay pretty much the same, so that you could further dissect the edge to how many times does this setup and criteria reach the scale, and how many times does this criteria reach the target too. That would be further analysis or further vetting of that trade. It's not whipping and spurring. It's not gunslinging. It's not anything emotional or discretionary. It's almost functionally mechanical. And one of the benefits of it is you know full well what the parameters of that setup are. So let's pretend that you have a IB something or another trade, okay? You see the IB and you watch price approaching it. So you're thinking already, okay, this is approaching my IB setup, which I have vetted. And then you watch for those particular criteria to be satisfied. And when they are, the trade's on automatically. And so you anticipate it well in advance of happening. And that is a huge psychological factor, because you can anticipate it happening. It's not a surprise, right? And then you add in the risk neutral scale, which also takes a huge amount of weight off your shoulders psychologically. And the purpose of all of this is that you use the law of large numbers, or let the law of large numbers apply, and manifest the percentage edge to your bank account. And you must realize Another factor of this is that you have to realize that the market is random. Nobody can predict where the market is going, or at least, nobody. There may be somebody somewhere, but nobody can predict where the market's going. And it's a statistical fact that the outcome of the very next trade is 50-50. There is no question about it. Even if you've had 50 losses in a row and you say, well, the percentage is whatever the hell you've done by improper mathematics, that I'm going to have another, let's say 50 shorts in a row, and it's going to go long, or 50 times the market's gone down, the percentage, in your opinion, is it's going to go up? Absolutely not. The percentage of the probability of which direction it's going to go on the next trade is 50-50. So you know that, and you just mechanically put that vetted trade on because you know it has a statistical edge. The outcome is the outcome. And, if you lose, it's the cost. If you stop out, it's the cost of doing business. If you don't, then you've made your scale. Then did you get to your next target? And then, and if it goes back to your stop, then it's a scratch. If it goes to your profit target, then there you go. And that manifests properly to your bank. That will manifest positively to your bank account. If that sounds familiar, it's the business model of the gaming industry from the point of view of a casino. They play no games which do not have a pre-calculated edge, and they play every game with exactly the same rules, and their only mission is to play as many games as they can in a 24-hour period with as many people. 21. They know exactly what the edge for 21 is, and they, if somebody wins, great. They don't shoot the dealer. They don't change the rules. They just steal the next hand, period. And it should be pretty obvious to anybody how the law of large numbers affects based on an edge. And all of this that I'm talking about, this vetting and all this stuff, primarily happens out of the market, right? You have to do this by backtesting or sure, you could take 50 trades with a specific setup in sim in a live market, but how long would that take? Depending on how specific your criteria is, that could take you years. So I don't think that's a possibility. And that's what I'm kind of struggling with, getting my head up together with Python and ways to properly backtest, accurately backtest and vet for myself these various trades. So that's where that is. And I will now do my TLab post, and then we'll watch the market open. What am I doing here? I'm getting all this combobulated here. TLab. There we go. Okay, dokie. So that's done. Now we're back at the business at hand here. So the stream is streaming. I don't know. Welcome to the chat. Remember to guard something or another. Okay. The stream is flowing. Bits good. 60 FPS. Yeah, hell, that's okay. We've been up for 34 minutes. That sounds about right. Cool. And now we'll look at the open, and then we'll go. What's the rest of it? I have a potential meeting at, I think it's 9. I don't know. things are right in the morning. I've actually started trading one of the stream, and I stream them because this stream is my virtual journal. I don't know whether I said that earlier or not, but you know, the purpose of it is to hear what I was thinking by my narration and see what I was seeing, obviously, by the video. So Bookmap records everything that happens in the market as long as you have it running. I run it for each session. I mean, for each each session. I start at 1700 at night and it runs to 1600 the next day. So I have both the ETH and the RTH, and then any trade that would be placed there is captured on Bookmap. But it doesn't do audio, so you don't hear what the hell you were thinking. For example, I can show you that actually while we're waiting here. Get back to the open, which was 1700 last night. Now, if I can do this right. No, I can't. There's a way to do that. Well, yeah, there we go. So at about 1700, you see I took a trade right here. It's hard to see that, but I took a trade right there at 1700. There's my entry. There's my stop. There's where I got my risk neutral scale. There's where this is kind of, sorry. There you go. There's the green line is break even. When the scale goes off, it goes up to break even. This is where my stop was trailing. I always bring my stop a tick or so under the break even line, inside the break even line, to cover commissions or whatever. And in this particular case, trade kind of flopped around, and I'm just getting used to trying to figure out what to do with this ETH open. And so I trailed my stop up to break even and took that trade off. So, no big deal. But this is how Bookmap records everything you do except the audio. So that's why I do the stream. And plus with the stream, then I can also listen to it on different, or, review it on different devices. So that's handy also. Oh, yeah, there we go. Now, where are we? There was that report at 7:30, I guess. Continuing on up here to the high. And pretty soon we'll have the market open. And when that happens, I'll start flagging the volume points of control as they migrate, because the yellow line here, come on, the yellow line will, wherever it went. What's going on? Here we are down here. This yellow line stays, it continues, but you can't see it. It'll scroll off to the left. So there's that. Now this seems kind of funky to me. I don't know why, but it does. And I try to figure out how to get this scale at about 50 cents so I can have some, relative sense of what the scale is going to be. And that when we open, I'll change the RTH charts to or IRT charts to RTH period, which is real simple. I can show you that. You just select the chart, hotkey, and now we're on full session, and then I'll hit that button and it'll be day session. Simple. My charting is pretty straightforward. I guess I could mention this, or ES, NQ, micro composite I've talked about, and the market profile. So we're looking to open higher in range, right? We know about that, so that's okie dokie. And we're going to open here in 2 minutes. Whoops. Too many mice and too many keyboards. Or too too small a brain. I'm not sure where that's going, but anyway. And open here in about a second or so. Let's get to the TLab. Why won't that open? I have a few monitors, these two primary monitors that are on the stream are, they're 32-inch 4Ks. They're on a rack, and then there's a couple other monitors, 27 high defs above them, which I use one of my other computers for my other life. Then off to my left is another one of the trading rig computers, which has the OBS and timestamps and stuff, and another 32 4K around the corner to the left there, further to the left on another workstation I have, which does all my daily normal stuff, right? Here we are. So there we have the open. You see how the VPOC immediately jumped up here, the volume profile reset. And what I'll do now is those flags I was talking about, which is right here. And I'll just do these throughout the day to track where this goes. And I can't seem to get my crap together here with my eyeball gauges off to track where this goes in terms of, that went way up here. That was the statistic, and I didn't track when we had this big pop as I was busy talking about something to the ETH high, which is a fairly significant or a fairly common statistic. You see 75% of the time that's taken out, and it looks like that's going to happen here now, but within a tick, right? And you notice that the green line has moved up here, which is the IB high. It's migrated, but the flag has not happened yet. There we go. The reason for that is obviously IRT is instant, but it's a bookmap thing. Bookmap will only allow the smallest refresh frequency on the cloud notes column is 1 minute. This line is an indicator which I bought from Bookmap, and it uses the exact same file that drives this column, but the guys that did the indicator, whoever they are, they have the refresh rate at about 30 seconds. So that's why you see a delay. It's the same exact data. So if that helps at all. And I'm not going to even put that in the timestamp. Who cares, right? So here we are at these highs, chopping around. You can see where we've opened in relationship to the micro composite. Now I guess we can do this part. Boom. What happened here? I don't want to do that. I don't want to change that back. There we go. Now I do also plot the micro, the micros, but I don't really pay a lot of attention to them anymore as much. I want them there in case, I try to risk manage or mitigate possible risks as much as I can. Come on, save all what's going on here. There we are. So that I know I don't know what I'm talking about. Yeah, mitigate risk, right? So if because I trade a 2-lot package and only one of them, I can't size down for risk management. In other words, if you get into a drawdown situation or something, the first thing you need to do, or a high volatility situation, which is we've had lately, the first thing you should do is reduce risk, right? If you've got to widen out your stops and targets because of the volatility and the average swings, the first thing you must or should do for proper risk management is size down. Well, if you've only got if you're only trading a 2-lot package, there's no possible way to size down. I mean, you could go down to 1 lot, but then you've negated the whole concept of the risk neutral and all those things. So the only way I could size down trading 1-lot package is to go to micros, which I don't. I have once or twice, I think, but I don't normally. And but that's why I chart it. I don't even have it on Bookmap anymore because there was a series of issues with Bookmap for a long time for recently about delays processing data, and turns out it was a couple of indicators. But I used to plot always the ES, the MES, and the NQ, so I could switch between them and see how they were reacting to each other. I used to also have the correlated market on here, which was the NQ, which I liked, but like I said, I've stripped all that stuff away trying to figure out why this delay problem was happening with Bookmap. And you see how when we had this Vpoc migrations, I brought these flags down. Now, a word about the Vpoc migration too also is that it's very, very sensitive, and it jumps around a lot in the beginning of the session because these volume numbers are very low. This is 1640, and this is where we are now. This is a little higher than that because that's where we are. So the minute that one of these prices is higher than, say, 1640, that's where that's going to go. Remember the description of the BPOC. It's just the price at which the most contracts have traded. We're still pretty volatile here. Look at this move. Look at this jumping around, just falling out of space on thin air there. Fairly light book, 10s and 20s. That's conducive getting your ass handed to you. Which harkens back to the discussion I was just having about sizing down when volatility is greater. To be honest, I haven't traded this entire week until last night, and that when things have calmed down a bit, and I'm trying to look at the ETH for that. And I took the trade that I showed you here on Bookmap. And I also took one on I'm testing out the Trader X thing at Top Step, which is really not user-friendly for me. But I did try one trade and got about 25 ticks out of it. So, that's on I can't stream that, unfortunately. It's on my other workstation around the corner there. I try not to I don't have any Microsoft Office products or anything on this trade machine. And here we go. Now, this is a test back, but you see they got it a little higher. And I will put in the template there. Hopefully that's at the right level. I don't know where I went. No, it's not. But it jumped just before that, and it did. Right there. So we've taken out that overnight high stat, which has been satisfied now. IB's right up here at the top. Yeah. So at the moment, the context of the market is pretty much rotational, right? Because here's our open. We've opening swing high, swing low, test back up, take out the opening swing high. Not a lot of stops up here. My guess would be that they'll test lower. But we'll see. And then I got to think about this other thing. I guess I better find out if that's a 9 or 10. God. And here we go. I wish the hell I'd have shorted that. Always happens. I have or am really focused on not being impulsive. And that means that if I'm not fully in tuned and narrating and whatever else it is with the market, I'm not going to be slapping trades on and off. What am I doing here? Meetings. That's what I was doing. Jesus, I start seeing the email and my brain goes south. 10 o'clock. Wonderful, magical, fab. I'll answer your emails at some other point. Trying to I'm not. I've recognized that with trading, I cannot multitask. It should be obvious when I am talking and then suddenly go dead quiet because I'm trying to type something on that stupid little text document for the timestamps. I think I may start a new idea where I don't. Well, that didn't work out very well. 5017. I didn't capture what market time the typical example here. I didn't capture what market time the open was going to. That the open happened, and the Vpoc migrations. Stupid. So what I'll do here is start this now at 50 because I'm a moron and I didn't I didn't get it done earlier. Yeah. I wish there was supposed to be a guy was supposed to be updating some code that allows you to throw these chapter markers in hotkey, and then I come back and easily type on them. So what I will repeat here is that the market open action is we've had a swing low, swing high. We're now rotating pretty much around it. We've had this Vpoc migration up and down, and you see that I flagged them. I discussed already that the Vpoc is much more, the volume point of control is much more erratic at the beginning of the market because the volumes are so low. Doesn't take much to change from 24.49 to 20. The minute this is 24.50, Vpoc will jump here we go up here someplace it's 24.90 or something. The minute this one changes to 95, it's going to jump down there. That's how that, or down even down this far. So that's why it's erratic at the beginning of a session. And there we go. You see, it just instantly jumped down there because that is where now we're trading. And I'll slap in another one of these. And now I forgot the point of what I was going to do. Oh, yeah. What I'm thinking of doing is rather than having these streams last the full session of the day, I was thinking of breaking them up, like a couple of hours for this open, say, and then when I re-engage with the market, every time I re-engage and I'm able to possibly put on a trade, should that present itself, then start a new stream rather than have these streams go for 7 or 8 hours. I personally would never listen to the whole thing for, a lot of dead air and stuff for 7 or 8 hours is stupid. That's why I try to be vigilant about the timestamps on any streams which have a trade involved, and that way can hear, people can jump, including myself, could jump to where what meaningful, So I'm thinking about that. I'll give that some thought. To put there. The stream, I guess I should put this as, I don't see it in my notes here. The stream is my virtual journal, right? So I hear what I was thinking by my narration, and I see what I was seeing by the video. And I've made a commitment not to take any streams off. I mean, any trades off stream, because that would be another part of this is complete transparency, right? And accountability to hold myself accountable. which I don't have much problem with those kind of discipline issues, like moving out stops and stuff. I pretty much don't have that. But I guess one of my bigger problems is the FOMO around breakout trading, because to me, a breakout trade is a FOMO. So I guess that's probably my biggest weakness, and the fact that I haven't properly vetted, by my own definition, trades. Which is, these are only my faults, of course. And I don't think it's a big surprise to anybody that psychology, I think everybody on the planet understands psychology's probably 98% of trading, I guess, or something. I don't know. Look where we are. We traded right up to and have been slopping right around this micro composite gap low. That was the high of the bar 4 days ago when we gapped down. Micro composite. Here's the micro composite. Here was a gap day down, then another gap day down to here, big gap day down, and a big sell off. So in my world, that top of that wick is a gap high, and this is a gap low. We closed the gap on the next day, and that's reflected then because I manually put them in. That's the gap low. And typically, did I do that here? Of course I didn't. What an idiot. Typically, I'll put the date so that I could, let's find for example, this is a naked volume point of control from May 31st. I'll just encode the date over there so that I can see these things and know if they're still pertinent or have they been, are they meaningful, etc. But interesting that we're just slopping around that high and that gap low. And yesterday we did just take out the previous MCVPOC and then set a new one in. So, yeah, there we go. So, yeah, trading psychology and weaknesses and stuff. I have error codes in my journals. I have one for execution error. I have one for breakouts, because in my world, in my mind, breakouts are assigned to me of a FOMO. I know it's a valid strategy for some people. Was how the turtles made a couple $1 million in a few years, I think, actually. But it just isn't work for me. And one of the reasons breakout trades don't work for me, or don't, I guess maybe I'm too slow, or I'm looking for confirmation or whatever, but by my risk neutral package, let's say I want to take this breakout right up here or down here. Let's say I want to take out this low breakout, and I think we're going to get a scale, and I enter down in here somewhere in a breakout. Where's my stop going to be? Right smack dab in the middle of all this traffic. So that's a highly likely spot to get your ass handed to you. And that's happened to me, repeatedly, to the point that I recognized it consciously and have an error code for it. So I am trying to be real vigilant about my discipline and my trading, like I said. And here's the breakout working. But that was not the spot for the breakout trade. This is the spot for the retrace back to the mid and VWAP. Okay. And trade down here. The problem with that is it doesn't meet my range requirement because there is this POC in the way, a level in the way. So, it's complicated, and for example, I never move my stops. I never widen my stop out ever. I have probably a bigger problem bringing my stop up too soon, trailing my stop up too soon to lock in profits. That's probably one of my bigger problems to work on now. But I don't have a problem taking a stop or widening my stops out. So that's not even a thing to think about anymore. And this is working out lovely, right? So this breakout trade or this rotation lower, we are exploring lower for sure now, was a good trade. And that's probably one of the more dangerous parts of trading is that when you do commit errors or break your own rules and it works, that's an insidious problem to erode your discipline and your rules, And that's why keeping a good statistical record of stuff is so important, because you can know exactly how often that happens and how often it was or was not profitable. And who knows, maybe if I kept real accurate statistics of that, I would discover that breakout trades are profitable for me. Psychologically right now, I don't think they are even at all. But that's why trading as a business is different than trading as a video game. And here was a pullback. So this could have been an entry point if I were convinced that there was going to be continued short action. And it's likely that the IB will be extended further lower. Right? That's how it works in the first hour. Remember that the IB high and low are simply the high and low of the first 1 hour of the RTH trade. It's called IB because it's an old market profile term for initial balance. Go figure. I think a lot of people spend a lot of time trying to make this seem like some sort of wizardry, and it's not. It's a statistical business. If you follow my, and I'm not saying I have done all this, but I am striving to. If you do the work and follow what I have outlined with business trading as a business, you will be successful. You can't help but be. That's the beautiful part about it. You will have a successful trading business. It can't be helped because the law of large numbers will manifest if you vetted the trade and if you take religiously those trades as they present themselves, you will be profitable. And don't take anything else. If it's not a vetted trade, you don't take it. And if you start one setup at a time and you do the work at night, weekends, whatever, you don't do the work. Well, you can do the work in a sense during the trading day, because if you've got a vetted trade that you're trying to test out and it presents itself, you can take examples of it during the day and add that to your database. But you don't it's not on the fly by the seat of the pants or any of that shit. And that's probably hard for me because I've been, I've done a lot of pretty goofy things, and a lot of times just kind of been relied on my ability to, I always did everything else good, so I'll probably do this good or well, and that's, I suppose an accountant or, someone is probably a good trader because they're methodical and measured, maybe more so than a gunslinger. Or shall we say a risk taker. Well, there we go. Traded down, traded up. So that me taking had I shorted here, this would have been a valid trade entry because there was 3 points, 67 to 64. That's 3 points to the scale. And then the target would have been 60, which we wouldn't have gotten, which I would not have gotten to in this case, but it would have scratched right here. Well, from 64 or 67 to 70 would have been a scratch right there. That trade would have taken the trade off. Well, sorry, right there. So that's, but that's fine. It's a scratch. No harm, no foul. Come on, man. This thing is smarter than I am half the time. I wish there was a way I could set this damn thing to always be on the. You do that. I got to Google it. There probably is. So many. One thing about a fairly complicated program like IRT is there's a lot of functionality in there that I probably have no clue about. Look at us go. Look at us go. Well, they pushed the IB high. You see, we got right down to the IB low, didn't extend it, and now they've come up and extended the IB high. So what we're doing right now is a real classic rotations, right? We're just trading it. This is auctioning. That was too low, and let's see if this is too high. And something's going on over here. I got to figure out what happened to my thingy here. Ooh. So there we go. I should say that my preference or my tendency is to short. And I don't know why. I hope I don't have a negative. I hope it's not some Freudian indication of a negative personality or whatever. But I don't think so. I think what it is it's because I'm basically not negative. Certainly try not to be consciously, but it is a definite, it's an observation more or less that and an old saying, or an old adage in trading is that the market takes the stairs up and jumps out the window down. I have found that typically I have I typically have recognized that there's more market action on a short side. And but having said that, I very definitely don't trade against context. And in this case, today, we are auctioning very close range here, so no trades for me at this point. We pushed lower, and now what have we done? We've pushed higher. We've tested lower, we've tested higher. So we have basically two distributions so far, but fairly normal kurtosis as far as statistics go on this histogram. And it's basically two-sided trade. So at this point, I would be tending to look for mean reversion trades, which is outside in, outside in, outside in, outside in. That's the typical price action or the auction action of the market. More days than not, 70 or 80% of the days are rotational rather than trending. So mean reversion trades are, I think, more common. I don't have a statistic for that, and I'm not sure I've ever heard one, but I think I know that rotational days are more common statistically. But as far as mean reversion trading, I don't know if they're synonymous and if that is a stat for that. But so far today, it would be a mean reversion situation. And had I been awake about it, this would have been a setup. This would have been a justified setup for mean reversion. And that is, we tested this IB low, we came right down to it, and we took out 155 stops right there. Let's get over here. 155 stops right there, 51. Back up, come down here to test again. What do we got? One stop. So that's divergence or exhaustion. This would have been a justified, and there's more than 3 points range to the scale. This would have definitely been a justified mean reversion trade to mid VWAP POC. So this is a missed opportunity for me, talking and not paying attention, I guess. That would have been a justified mean reversion trade. So there we go. I didn't take it, but that it meets all the criteria, right? So I wasn't switched on enough yet this morning to recognize that we are in a rotational trade. Even though I'm talking about it, it hadn't sunk in to my trading psyche level yet. That we are in a mean reversion situation so far, and that this was a good, a valid setup where we had a divergence or a exhaustion, you could say, is another word for it. We had 51 stops out here because you always look for fuel below these levels. That's typical retail, right? Retail always puts their stops below specific levels. Tom in TLab has a saying, think like a retail trader, don't act like one. And good advice. So you see all of these tests down here, all this stuff, all of these potential longs, these guys are throwing stops down here you would expect. We come down here and we only take out 151 stops. And then we trade up a little. We come back down, we only take out 1. If you want to be real cautious, we trade up again, we only take out 4. So you hit into that long, you've still got 3 points to your scale, no problem. And then your target is mid, and then VWAP, and then ultimately POC. You've already been scaled, and you just manage your trade and let it go. And in this case, you would have been from 60 up to 90. So there was 30 points. That was a no heat 30-point move across the range, completely across the range, in a rotational environment. So that's from outside in, back outside again. And that, 30 points, 2 lots, you're done and dusted, right? That's 120 ticks. $1,000 or something like that. 30 points, $1,500. So that would have been a beautiful trade. And one of the things I'm going to have to figure out, I've noticed about this, is seem to be now more conscious of narration and typing in this stupid thing than paying attention to my trades. Like that was a perfect example. And now we're extending that IB higher, which kind of gets me to a IB statistic, which I can put over here. So we're at what time now? Here I go with this time crap again. 14. Okay. So the IB, what did I do here? Oh, there's an IB statistic, which has long been known in the trading world. 95 or 8% of the time, the IB high or the IB low are taken out by the remaining of the trading session in the RTH period. Remember that the IB high and low are not set until 9:30. So after 9:30, either the high or low is taken out, and it's extremely high possibility. Could be the first second after 9:30. Could be the last second of the day. Nobody knows. But there's a fella in the TLab who does a lot of coding and is real sharp, named Rod. Does a lot of statistics stuff. And he came up with, or did the math, did the statistics on the fact that it has come up with what's called the IB30. So that says that in the high or low of the first 30 minutes, which sets right here, this is a perfect example. So there's the high of the first 30 minutes, right? That says that the high of the first 30 minutes will be exceeded, high or low of the first 30 minutes will be exceeded in the second 30 minutes. Well, here you go. It's been exceeded about 50 times or however many times up there. It's been exceeded for basically 20 points, nearly 20 points. 15 points anyway. It's been exceeded up. And it can be to the other side. So nowadays we refer to the IB30 statistics or the IB30 stat or the IB60, the older one being the 60. So I'm pretty disappointed with the fact that I could have been done and dusted and well in my daily target range and ready for this upcoming thing I've got to do, but was busy talking and not actually trading. So I'm going to have to be careful about that. Not sure how, but I'm going to have to be careful about that. I think it's that I think I get more tied up with this damn. I got to go back this weekend and see if that guy has finished updating that code, so I can just hotkey these timestamps in and just so that they capture the time, just so that there's a marker for the time, and then I can, because that's what the problem is. What I have to do now is jump over to this this thing. I can't seem to move it. Jump over to this thing, and I keep this. This is essentially what the timestamp would be so far. And these are ones from days gone by. And then at the end of the day, I slap this in with a stream ending deal, and that's how YouTube puts in chapters. They don't have, OBS has no way of doing that automatically, or lagging those out, or neither does YouTube, or at least I haven't figured it out. I spend a lot of time making sure those and the times have to be sequential. So that has to be, and of course, from a point of view of the stream, or for myself or anybody else listening to it, it's got to be, if the times aren't accurate, well, what the hell use is it, right? It's stupid. So I'm conscientious about that, but to a fault. And now let's see if I've done it again and if we are outside in. Okay. So far we're outside, well past our 3-point stop. We're at 10 points actually. So if we'd have shorted up here, we would be 10 points in the money for this mean reversion. And yeah, there we are. So I will talk less, watch more, see if I can get a trade or two off. Well, we're at 9:08. So I'll got about 45, 50 minutes to get ready for this meeting thing. At which time I'll also look at my email and, all that crap. Excuse me. Okay. Here we are back. Let's see. We're streaming. We got some views. Things are happening. Okay. Yeah, so this mean reversion trading so far today has been real clean and straightforward. Probably the only noticeable hiccup in it would have been right here. Where did my mouse go? Right here. Where, assuming that you took this as the rotation for the next up move from the next outside in, which is mean reversion, right? The mean being the VPOC. Possibility of a stop right here. But beautiful, these are all pretty clean. These rotations, too tight for me, for my risk parameters of my risk neutral setup, but trading plan, but they are. And this is just sweet. Right to there, continues on up here. Now, were you clever enough to figure out how to try to trade it back? And if you did from up here, you're as I said, you're 10 points in the money. So very well, definitely scaled. The criteria for the entry was correct because there's no obstacle in the way from any of these highs for your scale to the scale. And then, you're well in the money by over 10 points in trade management. After you get down in here, you're scaling or you're trailing up. And you still haven't scratched. Still haven't taken a scratch. You're still scaled. Haven't taken any heat. These kinds of trades are called asymmetrical. That's another term that is used sometimes, asymmetrical trades. And what that means is that the risk to reward is asymmetrical. In other words, if you took a short up here, you could have a 2-tick stop. That wouldn't be part of my trade plan or my risk neutral setup, which is, again, 2 contracts with 12-tick stops. First scale at 12 ticks positive. Now you're risk neutral. Runners at 48 ticks. Worst that can happen after this scale is a scratch, unless you're an idiot and you move your stop out. So that's the package. Well, if you enter that package up here, conceivably you could have your stop 1 tick above your entry, and your risk to reward possibility back to the mean is very much high or asymmetrically distributed. That's what you hear people talk about, an asymmetrical trade location or asymmetrical entry. That's what they're talking about. It's various people I've heard use that term before, and it's very correct. But it's still not stopped out, still not scratched unless you trailed up, and still no heat. My hesitance in entering up here is I start to suspect if we don't follow through down to the mean and we start doing this kind of stuff, has context changed and have they decided that these are too low and they're going to look higher? So that's, I guess the old adage of the first trip to the well is the best water, if there's 3 or 4 times, well, maybe not. For example, here, if I took a short right up here at the test, there's no trigger because we didn't get up and retest that. Now, if we come back up here and test and there's exhaustion, that might be a trigger, a viable trigger. But we haven't done that yet. There's no stops up here. And you know, or well, you should know, I hope. This is the high of the day so far, right? So all of these people that are shorting here, looking to get mean reversion or wherever the hell they're looking to go, all of these people have their stops somewhere above the high of the day. And you can see this resting liquidity up here, which is a suspicious spot for it. This crap here is the bracketing algo. That's this lower liquidity, which is, they don't ever seem to trade it. I've talked about that before. I don't understand what they're gaining by that. But this liquidity's been sitting in the book for a long time. It's been sitting. And this is one of the features of Bookmap that's good. This liquidity at this level at 52.10 came into the book right there. You can actually see what time that is even. That's been sitting there ever since. Ever since the open, essentially, just minutes after the open, this liquidity's been sitting up here. This one was from early on in the ETH, but traded through. Now this one's been sitting up here at 400 and some contracts. So that's a real level. This bracketing algo crap, I don't understand. I've talked about it before. If somebody knows why that's there, I'd be real curious to hear what it is. But the thing about this bracketing algo that puzzles me is, in order to put these orders of, hundreds of contracts in the book, you've got to have that big of an account. You can't just spoof. I can't spoof 300 contracts, 1,000 contracts, because I don't have the money I don't have the account to back that up. So consequently, I can't put an order there. And a lot of people can't, which says to me that these bracketing algos, because of their size, are a higher time frame. And typically, in my opinion, I have not traded in a higher time frame or for a hedge fund or something, so I don't really know this, but I suppose they don't do stuff for the hell of it. They don't, it's not a joke. And if you notice with these bracketing algos for days now, price never gets into this bracket on either side, ever. So why are they doing that? I'm trying to figure out how they are profiting from that. Who knows? Maybe it's something we can follow and make money off of. Now we've traded up to that liquidity and it traded out. It's traded out at liquidity at 10. But so this bracketing algo is a real interest, is a query for me that I've been looking at ever since it started. And the damn thing turns on about every morning at a little before 7 and stays there all frickin' day long. So that's irritating, but it is what it is. I don't understand what the purpose is, unless what they're doing is they're putting liquidity. This is what I suspect so far. They're putting liquidity outside, and then they are the people that are really running these icebergs, and they're trying to shove market into their icebergs. That's what I suppose is happening. But anyway, and nobody cares what I suppose, and it doesn't look like it's something tradable for me because it's just noise, which is irritating. And another thing they may be trying to do is that they've determined that a lot of traders, specifically retail types, are using these kind of heat maps like Bookmap. And you'll notice that by putting these high values in here and the way you can filter them, you eliminate a lot of the liquidity. You eliminate a lot of the liquidity unless it's really big. Maybe that's it. I can't imagine so, but maybe. Who the hell knows? Once upon a time, I took some stuff with Tom, with Jim Dalton, and he ran some big books, was instrumental in the establishment of CME, I believe. I mean, pretty big track record. He's more known for his market profile stuff, which he really didn't invent. That was Peter Stottlemyre. But he claims that when Stottlemyre brought that market profile into his office and showed him what he was working on, that Jim wrote him a check for $10,000 so that he can continue his work and develop it. Whether that's true or not, who the hell knows? I think Jim Dalton's quite a lot of bullshit, I think. I know he's a lot of bullshit because one of the time that I got involved with him in the intensive was when he said it was his last intensive. He was retiring. He was, quote, trading in his trading hat for his fishing hat, blah, 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 blah. And about 3 months later, he just came right back with the next intensive. And this was, I don't know how many years ago. And he's been doing them ever since. So it's just marketing hype. But when somebody says something like that, what else don't you believe? Anyway, so that's the story about Dalton. That he used to say when they were running a book that the institutional traders have no idea where these prices are. They know where VWAP probably is. They don't know about lines on charts or moving average crossovers or any of that crap. They're working in a completely different world. And to extent, Tom in the Traders Lab has the same conversation. He did have a Series 7 and used to manage money at some point in his early career. So he's familiar with a higher time frame attitude and trading style than I certainly am. I've never done that. Got into it a little late. At one point, I was thinking about a Series 7 back around 2000, but I didn't. So there you are. Well, we mean reverted a couple of times, and then looks to me like now, I hope I'm on the right screen. Yes, looks to me like now we're trading in this higher distribution, and they're pretty happy with the way things are up here at this point. So just looking at this from the open, we, basically open auction. They tested down, and then they mean reverted back and tested up to the higher side, and are now exploring this area up here, as everybody seems to be pretty happy with the way things are trading. And let's just have a look see here. We're going to probably have, what are we sitting at, about 42? Another couple hundred contracts. We're going to have a Vpoc migration up here. So that will say in market profile terms that value is being accepted higher. And that's a sign that we're looking higher. And there we go. What a magical thing was that? How did I know that? I knew that, as I explained earlier, very simply, because it's only the VPOC is just the price at which the most contracts have traded in the trading session. So the minute this price level had more contracts than the price level where the VPOC used to be, boom, there it's going to be. And you can certainly tell when that's going to migrate, as I just did in the stream. Certainly not magic. At all. I get real irritated by people that try to make this, some sort of secret sauce, magic, holy grail shit. The holy grail absolutely is trading as a statistical business, as I have just, pointed out earlier in the stream and talked about ad nauseum year after, day after day. And I do that not because I'm trying to sell something to somebody. I do that because I believe that what you verbalize, your brain listens to, your subconscious listens to, and I want that I firmly believe it, and therefore I firmly want it in my subconscious. And so I reinforce that to myself. And anybody that wants to listen, Merry Christmas. But, again, the stream is just my virtual journal. So this conversation and things are selfishly for my benefit first. If they help anybody else, that's great. And that would be one. I mean, certainly would be wonderful to have a couple thousand people and some dialogue going on, everybody thinking the same way. That'd be great. But the purpose of it is my journal and for me to be transparent and accountable to myself. And a couple of trades I got in the ETH Open, which I discussed earlier, were kind of nice. I'm really looking at that seriously because of my the constraints or the demands I have on my time during the day here. Shit, wrong mouse. Sorry, wrong screen. Sorry. I hope I got this Vpoc migration properly described. I wasn't looking. I'm terrible at that. Here, whoops. Here we were at 42 and change. And I mentioned that, well, as soon as that got a little higher, pretty quick, we were up here at about 40. And I mentioned that as soon as this price is greater than this price, we're going to have a Vpoc migration. And about 30 seconds later, boom, there we did. So just to repeat that, so in case I had the wrong window open, which I frequently do. And I try to keep this, I think I said this before also, I try to keep the scale rolled out to about 50 cents here or 2 ticks, because that gives me the ability to understand a sense of scale, let me put it that way, which is, from my point of view and what I trade, the tantamount part about that is risk management. And if these, lately in these big swinging days, you had to have the numbers rolled down to a couple of points, right? Well, it's only got to move from one little number to the next little number and you're stopped out. So I want to be real sure that I'm aware of that relative spacing and where I sit with my risk. Because the name of the game, as I said earlier, is risk management. Obviously, the most important goal of any trader, any time, is to be able to trade tomorrow. What the hell difference is all, you can do all the analysis and all of the vetting of trades and the statistical blah, blah, possibilities and come up with the probabilities. What the hell difference does it make if you blow your account up today? Nothing. So risk management is absolutely key. Stops are a good thing because they are managing your risk and protecting your account. They're a cost of doing business if you have a real legitimate trading business, which is a business of statistics, as I talked about earlier in the stream at about way back when, like 26 minutes in. So I won't repeat it all, but so we're going to be approaching the IB set now, which is at 9:30, and again, all the times on my charts and that I talk about is Central Standard Time. So get over that. I mean, these markets trade in Chicago Central Standard Time. In my opinion, that's the clock. I happen to now be in Central Standard Time, so it's easy. And it's kind of unfortunate because that's where the time constraints come in on my time and my focus. For years, we lived in Kuala Lumpur, Malaysia, which was, for me as a trader, was just perfect. The market opened, RTH session opened at 21:30. There's no daylight savings over there, so you had to fluctuate between when America would go on and off daylight savings. The time would vary, but it would open at 21:30. All my responsibilities of the day were done. Noise from the day was done. Family was all tucked in bed, and everybody was happy. And I had uninterrupted focus on the markets, and it was good. We moved over here a couple of years ago, and for various reasons, which are fine, but from a trading point of view, it's a constraint that I don't like. That's why I'm looking at the ETH open. And sometimes it looks like the ETH in this volatile period, the last few days, the ETH has been great trading. To the point of if I was, able to stay up all night and all day like I used to be able to do years ago, I would be trading most of the night because it's actually been a more directional, more measured kind of move. And, when you stop and look at it, we're only talking 40, 30, 40 handles at a level over here. So it's not a huge liquidity as you would normally expect from the ES, more like more like NQ kind of levels. So until this smooths out, it's the ETH is not that different. I suppose the liquidity is maybe half. I think I did a stream last night because I did do it, as I said, a commitment that I don't take any trades off stream. And so before I jumped on there, I had actually put the trade on and then started the stream as quickly as I could get it open. So a couple of seconds, but you can see the book. That's the great part about the stream and about the recordings is you can see everything exactly as it was. You can see the trade management and all of that stuff. I can, you can, anybody can. So, there we go. So the IB is now set right here at 9:30. And there's the IB. So it would be pretty, well, and you see how this little trade popped right up there. Now, it will be pretty reasonable to expect that we would take out the IB high. Remember that the IB 60 stat, or the old-fashioned IB stat, is 99 or something percent of the time. The IB high or low will be taken out by trading in the rest of the regular trading session hours. So it would be a reasonable bet that we're going to get from about 18 up to 22.75. This could be a reasonable, legitimate entry here in this area because there is 3 points of scale to the first obstacle, which is developing value area high. The problem I would have with an entry in here is the fact that got a lot of traffic right over here, and the stop is going to be right down in the middle of most of it. So to me, that's not a particularly good location. And there's no entry. This is kind of out in outer space, right? Is there any level there? Is there any trigger there? Is there any vetted trade there? No. What this would be for me essentially would be just betting on the come for a IB high statistic, but in space. Now, as we get down here lower in these areas down here, that's, not, that's more of an outside, if you want to look at it on this smaller scale, it's more of an outside in kind of trade with the high up here. But I think yesterday it happened that we got right up here in a situation like this and ended up taking out the other side, which happens frequently. So again, every trade is, the market is random. If you have a vetted or a properly statistically verified edge, you must take every one of those. I do not have, based on this trade. How could you possibly have an edge here that said, what are you going to say? When the market pulls back 6 times, I mean, it has to be, you have to be able to prove it statistically by a specific criteria. You can't just say, well, I traded the IB high. From where? Was it in context? Context is up, so that would be in your favor. Context is sure as hell up at this point. But we pulled back to this low volume node, and these low and high volume nodes can be meaningful. And that's what I was talking about right here. So this is outside in, right? And then up. That's a very possible trade. So is pulling back to the Vpoc and then heading back to there. So there's a lot of possibilities here, and it looks like it's edging lower to me. And I'm not going to put money at risk for that, even though it would be a nice 8 points or something, right? And it could go zooming right up there, and yeah, great. I'm probably way too cautious. But The only thing that this has going for it in terms of a possible setup would be mean reversion on a microfractal. In other words, it's not mean reversion outside into the real mean, but it would be to this fractal auction, which, let's watch, looks to me like it's going to be. We would be scaled, right? 15 to 18. There you go. So an entry down in here would have been, you'd have your risk neutral scale and then Merry Christmas. The worst that could happen would be a scratch. And the best that could happen would be the IB developing value area high, then the IB high statistic, because above the IB high is going to be a bunch of stops. And so there will be a price pop up there. Fully expect that. And another thing that's important to be aware of is how quick and accurate are your executions. I'm talking about, okay, so here's our swing low equal to this one, and then we're in, so we're scaled out. Well, when I see that dot, I'm not quick enough to get into the market until probably up here. And that's just a swing low. There's no trigger. Other than you're looking at the low volume node mean reversion. But that's not really that still doesn't have a trigger, I don't think. So it's probably obvious that the work of the business is to identify setup's easy. Okay, IB high, the IB statistic, that's pretty easy. But what's all the context that goes around that must be in place every time in order to take a statistically significant data set and determine whether that trade has an edge or not. And here we go. Looks like it's going to have an edge. There you are. I'm going to be up here and take the IB high likely. So that would have been a nice trade. 8 points, 9 points. Great. And perhaps I'm just too, cautious, I guess, or whatever, but there we are. That's actually the IB stat, these little guys up here. It hasn't hit into those stops, which is kind of interesting. I would have expected a substantial amount of trading above there. All the top and bottom pickers are slapping on shorts. You can bet on that. And this is a form of exhaustion, right? So this was the big 430 stops out here. All those guys that were trailing tight. 18, 2. Is that really exhaustion? Are they really going to rotate down? Beats the hell out of me. I would say no. My opinion is it's going to go. I am anticipating that it'll go higher and that there are stops above this IB high, which are going to get hit at some point, more than 24 of them, and it's going to go up before it goes down. And as Tom says, or anybody says that knows about trading, the market goes up to go down and down to go up. There we go. There's a few of them. So there's that pop I was thinking was going to happen right there. And that would have been a lovely trade here, even if I was clumsy with my entry. That would have been a good IB stat trade in direction of context. So all of those things would have been met, but I didn't take it, obviously. Yeah. Let's see, 39. I got to be mindful of the fact that I got a meeting at 10. So they took the stops out. Now let's look at that. So we come bip up here, and we got iceberg absorbed 91 of 91 stops up here. I don't know why I don't see a stop thing there. It says 54. I don't know. And then we come back up to this level, and we only get 1, then we get 4, which would be indicative of exhaustion or divergence, stop divergence, right? Suggesting that we might go lower. There is another trade called the well, we're in another TLab vetted trade area, which is IB failure or IB continuation trade. The first parameter is that you've got to have exceeded the IB and taken out some stop, and then you pull back to it. Now, if for an IB continuation, you trade back down just like this, then you trade up to it and continue on in the direction of context. The IB failure trade would be that you trade up here, can't get any traction over it, and then fall back towards mean reversion, which we've been doing all day. And it's not really a valid trade outside of a mean reversion auction, but we have been in mean reversion all day, but this last hour or so, context has been very definitely up. We were rotational here, traded down, but we haven't done anything, and we did have a Vpoc migration up to here, which was probably a good indication when we went up and pulled back to it, which was a good long location. With, put on your helmet and see where it goes. See if we can see that on a book map scale over here. Well, I call the Vpoc migration if, we talked about that. What I didn't pay attention to was the fact that we traded down to and tested right here and then took off. So anywhere in here, a valid long and a Vpoc migration trade would have been in here at 05, and now we're up here at 22, so 20 something points so far. The helmet, right? Obviously scale with no heat, and then up. So I missed opportunity. Missed opportunity. All right, I've got to start thinking about this meeting I have to step away for. The screens will all stay up, of course. I'll put the be right back walking base on and can watch the market here. I will be also, but I'll be leading a meeting, so I can't. One of those kind of things I can do multitask with. And here we are back at our mean reversion area, our low volume node, which paid out here and here, and will it pay out here again? That's what we don't know. My theory about these, I get more leery as the more times we come back to the well. How many times can you drink from it? And if you subscribe to the asymmetrical trade concept, well, you just put it along, you consign yourself to the fact that the market's random and it'll, probability is 50-50. So you put on that trade and see where you go. Now we just barely would have gotten to scale if you're real quick with your entry at 15 and change. And not scaled if you were at 15 and a half. But, you know, so I don't know. Yeah. Oh. Disappointed. I've been working on a strategy around numbers that I wasn't at the desk for this morning. Would have been a good test of it. We're coming into this big low volume area right here, which is untraded pretty much. When they breeze through them like this market profile, they call them singles. So we'll see. We've taken out, so the IB stat is set. We've been mean reverting to the top side. What we need to be kind of looking for at this point is if context is going to change. Are they going to continue to trade up? The micro composite high is somewhere over here, right there. Micro composite high is about 31.75. Oh, no. This is the gap high. Excuse me. This is the micro composite high. Let me confirm that I got that right. 53.59 quarter. No. Wait a second here. What the hell's going on? I didn't get that in there. I didn't redo that when we had yesterday's pop. So it's 53.59 quarter is now the market micro composite high. So 53.59 quarter. Oh, so that's wherever it is. That's the micro composite high. And that's the previous RTH high. That makes perfect sense because that's where we put in our high. So that I should have just scrolled up and it would have been just as easy to put it there. There you have that. And what happened? Okay, we went to the well and we came back up again. So good for us. Good for whoever took that trade. Well, I guess you could call this a setup and a trigger. There's 59 stops out and then 30. If you're looking at an asymmetrical trade just below these things, you got in here at say 15 quarter. You're okay at 18 quarter. So there you are. There's your scale and you're looking for that higher ground. Okay, so yeah, some nice moves today. I haven't participated, unfortunately. I don't know what's wrong with me. I'm turning into a wuss, I guess. I don't know. Don't know. I got all kinds of noise going on over here now. Where am I? There we go. There we go. Getting set up for this meeting. I'll have to move my headset gear and stuff across when I guess I keep threatening I want to buy a Stream Deck, Rhodes Duo. Then I can use my XLR mic and my boom for the stream, and then keep this headset, which is a Logitech G Pro or whatever it's called. And I just keep, always something else. Buy a generator for the hurricane, do whatever it is. For some reason, I don't ever do that. I get weird like that sometimes. Yeah, there we are at new highs. So that's pretty cool. Those two trades worked out exactly right. As far as the planning and the fact that we're looking for an IB continuation now. We did have a target, or we did have basically a retracement and a trigger, and now they're trading off the top of that IB high, so that qualifies as an IB continuation trade. And now what is all this noise I got going on here? What's this? Trying to get set up, and terrible with multitasking. The technical stuff. Okay, I got that. Now what's all of this crap over here? Thanks, Bill. Yeah, great. So what kind of kickoff? Okay. I'll put that in August 12th, whenever that is. That's Monday, I guess, at 10 o'clock. Yeah. Okay. Mr. Jeremy, that's fine. There we go. This. Take that off. Okay. Well, maybe not. Maybe not an IB continuation. Maybe it'll be an IB failure. But at the moment, we are definitely context up. And so the IB failure is typically only a mean rotational or an open auction trade. Obviously, it has to be reverting to the mean for the IB to fail, right? That's outside in. It's just another way of saying that. So there's that. It seems like I've got about 9,000 frickin' emails and shit and stuff. Sorry. Oh, no, not so bad. 14 is all. So we got this, that, and something else. Call reports. Okay. So now I've got 51. So I've got that part set up. Let me make sure the OBS is up on that other one. Okay. So in another few minutes, I'll drop my headset across. Yeah, I wish I would have. I don't know what's wrong with me in that I'm not taking these trades, but I'm standing here talking about them. What? I guess that's kind of weird. I'm starting to turn into a internet asshole guru. Maybe not. I hope not. In a day like today, when there is just a real definite wrong mouse, sorry. There's a real definite context, a rotational test down, and that didn't work out, too low, and here we go. So that's rotation. That is a definite context up. We had a Vpoc migration higher, nice test, continuance for the IB high and points north, I guess. Any pullback any trade from the short at this point is counter trend, which is not in my trade plan to do. So any of these pullbacks are legitimate get on points for the trade north. The ideal one was the Vpoc migration right here. I've already talked about that and how I have a mixed history with those, because I mean, obviously, how can you miss the damn thing? You can't miss the Vpoc migration, right? Boom, there's the setup. It's the trigger and the criteria. That's why the criteria or the parameters around any of these setups is so critical to have in place and to stick to rigidly when you vet the trade. When you obtain however you obtain them, those 50 or so samples of that setup to identify whether it has an edge or not, those parameters are so critical because that can make a big difference. I mean, a huge difference. And if they are the same and you have identified edge, then you take every instance of that occurs. But I've often as not seen a migration up, and then I enter and they come down here and test, I'll check at price 3 or price check at aisle 3, and then they go the other way or whatever. And it's not been a statistically, with my more or less loose entries of it from the beginning, when I started just thinking, okay, let's go with that mechanically. That didn't work. So anyway, there you go. Do the homework. That's what I'll be doing this weekend. And I try to do every night. And now I'm going to get myself over to my headset switched over. So I'll be back in a flash. 3, 4, 5, 6. Oh, so my mic wasn't working. Well, all right. Meanwhile, back at the ranch. So that meeting's over. I tried to point out keep up the Vpoc migration flags. And I was just pointing out how this Vpoc migration was a great qualified setup. We come up here, the Vpoc migrates, we trade back down to 2 out, get 16, we get 1, over here 7, and then up we go, right? And it goes up to the IB high again. And then I think, wait a second, yeah, then test that IB high a couple of times. So if you were real and on up above it, and now we're down here where we're still kind of fussing with the idea of an IB failure or not. But I don't, in my opinion, it wouldn't be valid because context is still up. The IB failure is only really considered a valid trade in a rotational or mean reversion kind of day, which is where we started out. But we are not so now. And the mean has rotated way up here to the top. So there we are. No trades for me so far. The stream is streaming, flowing. Yeah. Okay, so we'll see what happens. I'm pretty disappointed that I haven't gotten any of these trades, but the narration and screen time is equally important. And I did pick off about 30-something ticks last night and in the open of the ETH, as I pointed out earlier in this stream, showed how Bookmap records all of that, even clear back to the ETH open, where I took a quick short, trying to kind of get a impulsive move off the open and looking for continuation. Which I've noticed in the ETH period. So it was kind of an experimental trade. It traded down through my risk neutral scale plus a few ticks or point or two, and then traded back up a little bit. And I trailed up that the stop to break even just to make sure that I didn't have any loss there, and it was taken out. So, 13 or 14 ticks. And on the top X thing, I got about 25 or 30 ticks again, which I can't stream. So that's just monkeying around with this new Top X platform, trying to see what that's all about. And, I'm not going to put it on this machine because I don't have. I might, but I don't have it there now. So what are we doing here? So we've traded past this low volume area. What we're kind of doing, it looks like, is doing a little mean reversion around this fractal up here. Well, we were here. Now we dropped down to this one. So we tested through this extremely low volume area towards and now looks like we're going to trade back up towards the VPOC. Or not. Or just a series of pullbacks and drops. We traded pretty close into this consolidation area, which is right here or here. Yeah, it's pretty subjective, I think. So let's see now. Myself a little time to adjust back into the markets. Even though the screens are right in front of me the whole time, I have these two, my trading machine screens, the three of them, but the two trading screens are right in front of me at the lower level on my rack. I stand up all day at two stand-up desks, so they're right eye level, and then my other stuff is on a couple of my screens on the upper rack, part of the rack. It's a four monitor rack, and then there's a vertical off to my left on the same machine, and my old workstation has got a 32 4K, like the trading ones, for all the other stuff, that's what I use for email, and during the trading day, it's got the TLab and the reports and stuff. So here we go, a little mean reversion here, I guess. The more back into the swing here from the meeting. So we have here's today's trade. Extended down, didn't get any place here. Then we pushed the IB higher, and we have consistently moved higher with Vpoc migrations. This one was a good one. And again here. And now we're trading up here at the top where we are, if we're going to extend or not. This is today's trade in the micro composite yesterday. The big drop on Monday. The gap high, the gap low. We closed the gap on Tuesday. And furthermore on yesterday. We still have a gap up here for that Friday gap down. So they're all busy with the yen carry trade, unwinding the yen carry trade, and everybody's squawking about crash this and something else that. It's got nothing to do with America. It's got to do with the yen. But, a bunch of people who were borrowing the yen at zero interest and investing it in other assets. Now the yen, now that yen interest difference is being changed, and so because they don't want to lose any of the millions and billions they made, they're going to unwind those trades, and then all the pundits and the political assholes get to talk about how the economy's not good. It was completely ridiculous. But it's the main problem now, here as I can tell, with America, is the lack of education. It's phenomenal, astounding to me. It's really doesn't bode well for the duration of the country. But the markets are great, and one of the things that's wonderful about trading is you are your control of your destiny, and there is a continual stream of opportunities. That's why FOMO is a real insidious issue that needs to be dealt with. Everybody will always have it, but you need to recognize it and control it. Because there's a continual stream of opportunities. Trader Lab guys like to make a joke about I missed the bus. I'm sitting at the bus stop. In other words, I'm waiting for the next bus, which is a pretty good analogy, I guess. And we're back over here. We had a little Vpoc migration lower, but you notice how these flags work out now. It's, I can see this, but I would have to scroll way back to see where this Vpoc originally came from. And let's see, it was right there, this little flag up. So we still have not breached this main move up. We tested down here, didn't quite get there. Looks like it was still too low, and they traded back up here again. So we'll see. Trying to get myself into the thinking of things here. So here's our VPOC. Here's their IB, which is long gone stat, developing value area high, and the RTH high. So this tells you that there is very little taper at the top of this thing. 70%, the value area is where 70% of the volume that's traded in the distribution. So this is the top edge of that. So there's a point or less from the developing value area high to the overnight high, which means there's no taper or excess at the top. That's typically not considered a good thing. That typically markets don't finish that way. That would be considered a poor high in market profile terms. Two of them together is a weak high, if I'm not wrong. Been a long time since I studied and traded market profile. I do have one up always on IRT, but I don't know, 10 years or something like that. That's when I started using IRT, actually, was in the market profile days. There's a market profile chart. So everything looks like it's okay. Data's okay. Got no delays. Got no lags. Everything's happy on the bookmap side of life. But volume is relatively muted, so that's not a big surprise. Still don't have real big volume here at our levels or liquidity. It's much better than it was. Seems like we're usually up in the 60s and 70s. Oh, that reminds me, I've got something I wanted to look at over here. Charts I've been monkeying with on the back side of life. I have a chart which looks at the average, today's volume against the average volume, and we're quite low. We're at about 83% of the typical volume, and I'll have to look at what those base values are, but it's average volume is 809,000 at this point in time in an ES trading day. 1 minute data, and we are at 670,000. So we're a couple 100,000 light on data. This is different things there. I've set IRT up so I can trade it if I have to, if bookmap takes a dump. I've got a heat map and bubbles going on it and the price levels. This is that thing I was talking about. This is a study of average volume and where we are historically, and I'll have to look at the parameters of how many days that look back is. Yeah, and like this is, for example, this is the chart I use to export data for doing statistical analysis. It plots the levels, all of the price levels, VWAP, and all of that stuff for both RTH and ETH, and then I export this off on 1 minute or tick data, whatever, and I'm able to then try to do some of this analysis of vetting trades with, how often do we, pick one, any one of the setups that you want to have determine as a vetted trade, rather, because I don't think it's reasonable to imagine that you're going to be able to capture 50 trades, which is about the minimum for a statistically significant data set, to analyze for a statistical edge or not. You know, if, for example, you'd have to, in my opinion, you have to have the parameters correct. So the basic parameter would be, first parameter that you would start with is opening type. So the first criteria would be higher in range. Then it would have to be I would have to come up with a criteria which is context, because I believe it's ultimately important to trade with context. Say I wanted to vet the Vpoc migration setup with some specific parameters about pullback trigger or whatever else. I would have to start with opening type. Then I would move down to context and how to define that programmatically. And then how many times when Vpoc migrates in the direction of context and you have the requirement or the criteria is met of the pullback or the trigger, how many of those trades out of 50 do you take, which achieves your scale, and second of all, achieves your runner, or, depending on how you want to break that down. So you'd have to have 50 instances exactly like this. Go back and tell me how many days you see that are exactly like this, or as close to this as you want to define for your parameters. And those would be the days that would need to be captured in your data set. So I don't think it's realistic to think that you're going to trade those days, because you can't just trade 50 days in a row. They're not the same, right? That's what I believe. So there we are. And, with what I believe in 25 cents, you can make a phone call, right? Or I guess nowadays it's with what I believe in. $10 you can get a Starbucks. That's probably more applicable. And we continue to march higher. So the Vpoc migration, even though there's been some serious counter rotations, which would have certainly stopped you out. There we go. And we're now approaching the value area high from yesterday, which you see right there. And then after that comes the overnight, or the RTH high, which is previous high, which is right there. And the statistic for that, coincidentally or incidentally or curiously or whatever you want to say, higher in range, previous high, is 55.2%. So 55.2% of the time when we opened higher in range, out of 2005 days, I went through this whole story at the beginning of the stream with my pre-market analysis statistic. 55% of the time, or 337 days, 27 days out of 592 days where we opened higher in range, out of a total data set of 2005 days, 55% of the time, price in the current RTH period, retouch, tag, whatever you want to call it, took out that price. So, which would be a new MC high. Likely that we're going to do that by the price action. I would say we are definitely trading up. Our trend was rotational, test down, and we're still chugging higher. Here's the RTH high, and here's the previous RTH high. Here's the developing value area high, and there's the previous RTH high. And because it's the high of yesterday, and yesterday was a new MC high, that's also the same thing. So there you go, statistics and probabilities. Now, loop back to my story about breakouts here. conversation and error codes, which I hope I talked about somewhere. I know I did talk about them, but did I? Yeah, around 55 minutes in, I was talking about error codes and breakouts and that kind of thing. One of the things, another trap that's real easy to fall into, and which is the stock and trade of most internet gurus, is what I call rearview mirror trading, or, hindsight. I call it RMT, that just quicker. Well, yeah, I saw this Vpoc migration. We tested down here, we go up there, blah, blah, blah. It's the typical crap that all these internet people do frequently, which is not trade the hard right edge, but talk about, with great wisdom and foresight, how they would have done all these things. So 2 things here at this stream, at my stream, because it's my virtual journal. I don't do that because I realize it's stupid. And second of all, my trades are all on stream. There's no, for complete transparency, right? So there is no possibility that I can say I got long down here and I did something else over here, because it's all on the stream. And if I take a trade, it's on the stream, as are any kind of movements, any kind of adjustment of any of the price levels, and the fact that I am narrating. The idea is that I hear what I was thinking by my narration, and I can obviously see what I was looking at and what I did with the video. Now, Bookmap, as I said earlier, does record everything, and I can show you that by scrolling back here to the ETH period. Right there. Now this is the ETH open. Oh, don't want to do that. Okay, this is the ETH open at 1700 last night. Here was my short. I'm trying to get some continuation moves off of the RTH period, and I've been watching them, so I thought I'd give it a try. Here was a short. There was my scale. Little bit of heat right there. There was my scale. Let me just get this a little easier to see. Okay, and maybe. So this green line is break even. And that's where the stop is at 12 ticks. I always move, once I have gotten my scale, my risk neutral scale, the worst that can happen is a scratch, but I always move it up just a tick or so under the break even, takes care of commission. So it's really, really a scratch, right? Absolutely no expense. And then I see what happens. Well, in this case, we traded down a little bit and then caught up here and started consolidating, got a big buy absorption here, and I didn't want to be monkeying around too long because I had dinner waiting, et cetera. So I pulled my stop up, trailed my stop up to just below break even. And as it turns out, it was tagged by 1, and then it went back down to here where I could have, and I actually discussed in the stream, I may develop a risk or a trading plan, a setup like I have. Whoops, that's the wrong thing. Trading plan like I have here. I have risk neutral. I have another one. I may put up one that's just both stops for that ETH open. That's just both stops at the first scale, and then that would have been, I'd have had them both out right here, and it would have been double the pleasure, double the fun, right? And here's my 48 tick second stop. But all this is recorded on Bookmap and will be there in perpetuity, right? Except no audio. That's why I do the stream. But shows you that there's complete transparency here with what I'm doing. And now we're back over here. So we traded up to developing value area high. Had a bit of divergence, not a lot. Selling back down again. I'm not going to be thinking about this. Is pretty close trading for me, and I'm kind of, the later we get into the session, the more I'm expecting to have some sort of a rotation, profit taking, for example. So I'm a little bit more hesitant than normal. And I wouldn't take the short because that's counter rotation. And so far, in my opinion, we haven't, the context of the day has not changed. The context of the day to me is still up or north. So I would only be interested in looking at longs. I do have a problem taking, for example, the IB continuation further from here towards value area high and developing value area high or value area high. The difference between these is that developing is in this current session, or in the current session is the value area high of that session. The value area high here is from the previous RTH period. So I would have a hesitant to take it long out of here because it's so close, 2 points, to the overnight or to the volume point of control. And everybody on the planet knows, I would hope, that there's a whole lot of stops laying down here, a lot of fuel under the POC. All these guys betting on a long. And same story here. Now, this is where we had another Vpoc migration up. So if you got this Vpoc migration with the good trigger, you're scaled and you're sitting here, thinking fat, dumb, and happy, looking for higher ground. You might have been taken out here depending on how you were trailing. I would be, because I would have trade managed up below these swings. So I would be probably out at this point because of this. And now we haven't had, this one would have really, gotten you. And this would be the one that I've talked about, the Vpoc migration, a time or two so far this morning. But this is more typical to what happens when I trade them. If you trade this mechanically, even here's a pullback and there you go, right? So that could be considered a trigger. And I haven't vetted this trade to know that it has an edge. So therefore I shouldn't be taking it in any case, but you get exactly no place, no scale, no nothing, and you very definitely get stopped out. So there's a full stop. I don't typically, I used to take it a lot, and I realized that I was getting beat more than I was getting rewarded. So in my local journal, I have 2 journals. One is local and one is Journalytics from Jigsaw, which pulls data automatically. It's pretty complicated, pretty comprehensive setup. If you own Jigsaw already, you can get, I don't know whether I think you have to own Jigsaw tools also to get Journalytics. I'm not really sure about that. I've owned Jigsaw for donkey's years. And I think the Journalytics is $500 a year or something like that. I'm not real. I haven't really taken advantage of the power of it for analytics about my trading, because I've been trying to get other things organized and kind of lined out, namely vetting the trades so that I could have some meaningful statistics about that. And it doesn't have a system for back testing, which is kind of too bad. But and also, if you have a rhythmic log on, which this is rhythmic data, and you have 2 add-on or whatever they call them connections, I have only one, which I use for IRT. If you can have 2 of those, Journalytics will automatically capture your trade data from rhythmic real time, and it captures the maximum favorable and adverse excursions and all that kind of stuff. So it doesn't do that when you use end of day download, which is what I have to do now because I have Bookmap. I'm Bookmap and IRT running. So there's a little bit about that. I guess I could say something about that. 03. Yeah. Well, here we are, kind of heading into the doldrums a little bit. It's 11:18. This is kind of a time when I suppose all the institutional guys are having coffee or whatever they are doing. Certainly a good active trading morning if you were in tune with the market and got on those longs from the value, obviously RMT trading, right? Oh yeah. So I saw this pullback. It was up. We tested down here to the IBE low and I went long. So now you're up, what are you up? 29 to 100 points. Really? Yeah, 100 points. 52.59 to 53.32, over 100 points. Points, not ticks. Well, I'm certainly not. I'd love to blow smoke up your butt and say I did that, but I didn't. But the opportunity was there to have done so. And I'm sure there are people who have done that. And here, if you look at it on the wound down scale, here you come down to your IB low, test down here. Or even if you took this when you passed back through these levels and got on it long, you're still catching 80 points up. That doesn't sound right, but it sure as hell is right. There's 52.60, and that's 60. I'm sorry, I'm looking at the wrong thing. Yeah, it's not 50, 100 points. But it's 50. Yeah, it's more than 50. 40 and 30, 60 points. It's still pretty good. I don't know what I'm thinking about. Eyes aren't working very good here. This is not correct. $52. Yeah, 52.60. I was thinking it was 29. Sorry. Yeah, anyway. Okay, so 52.60 to 53.35. Do the math. That's the range so far in today's move. And we've had three, or at least two, very clear Vpoc migrations higher, neither of which took any heat, both of which were good for 20 points or so. So, yeah. An endless stream of possibilities and opportunities. And just to carry this conversation a little further with this continual stream, that the opportunity the market continually presents opportunities. Assuming you aligned yourself with context, which is only makes sense. Do you want to be part of the advancing army or the retreating one, right? And you don't try to consider yourself a bottom or a top picker. Just say that you went with these Vpoc migrations. Let's discount this bit of trade down here where they pulled down to the IB low. So let's take it from 80 to 530, right? Say you just got on one of these and you're managing your trade by trailing up behind these you could do it just trailing behind these Vpoc migration levels or the swing levels if you want, and you're still in the trade. So your first scale is 12 ticks, and now you are 50 times 4 is 200. So that's 212 ticks. And in case you don't know what that is, I don't do it in my head. That's $2,600 in the morning without any heat, any stress, not, that, and that's one trade with a 2 lot. So there you are. Now, had I eaten my own dog food and done that, I'd be a very happy camper. If you can do, I think let's do that math. I think there's 220 days times, say 200. That's 530 grand a year. Trading only 200 days. I think there's 230 or something like that trading day. I don't know, just off the top of my head, but are you happy with $500,000 a year? Maybe you're not. Maybe, I saw some idiot on somewhere, on one of these Tony Robbins types, he'd be embarrassed if he only made $500,000 a year. Like, okay, well, I'd like to be embarrassed the hell out of me, So yeah, that would be nice. That would be a nice addition to my existing situation. And this movement is measured. You see, it's we've had some rather rapid stuff here, but it's not crazy like it was. Not crazy like the last few days have been. This price action is pretty. Price action is pretty normal looking. Kind of thin still, which is not good. I think I've got these balls set at 25 contracts or something, so that's pretty low trade. And when you look at the book, that was a 6 lot went off. There's an old adage, I don't want to trade a market I can move. And there's a lot to say for that, I guess. Which I think is a rendition of Groucho Marx. I wouldn't join a country club that'd have me for a member. And here we are touching this IB high a time or two and back up. As I said earlier in the stream somewhere or another, I'm hesitant and was hesitant. Didn't take this trade off the IB continuation or this IB test because of the Vpoc just a couple points below it here with all the potential fuel that's down there. And it's getting late in the morning. So may not ever happen, but this is a time when there could be a counter rotation. At some point in time, there's my thinking anyway. At some point in the day, all these all these people are long. Well, at some point, somebody's going to take profit. I guess that someone did a little profit here and a little profit here, but we've now crossed over the 1.1 million contracts in the day. Well, what am I doing here? Let's see what that if that thing's working. This is just a chart that I picked up off of IRT. So this is not working properly because according to IRT, there's there is 1.1 million contracts traded. So I've got to look into the story with this chart and see what the parameters are, what the look back is for average and total, but the total volume should be 1 point if it's what it says it was. What it says over here is, whoops, wrong. Well, it'll be here too. What it says over here is that there is 1.1 million contracts traded. Never mind. That chart is correct. This is full session. This is since 1700 last night. So it's quite accurate, I believe. Didn't think about that. If you happen to have IRT, there's a bunch of, I can't imagine how much resources and are available there. So we're back here to our rotational trade. Now, if you're a shorter term or smaller fractal, whatever, however you want to look at it, a shorter time frame trader, what's happening here? Well, there's 53.30 to 53.22. So there's 8 points that this has been swinging now for 1, 2, 3, and now it looks like they're going to get down and test all that fuel I was worried about down here at the bottom. And that's very, very possible what's going to happen, so you have to decide what time frame you're going to trade in and whether you want to try to take the bigger moves and get your scale and put on your helmet and, go to the gym or whatever it is, like some people do. That's okay. And that's valid. And now we're going to test it, get through this POC. And here I have a big quandary. This is not a trade that I can't justify taking because, first of all, you don't diddle in the middle. That's the middle. By definition, again, this is the price at which the most contracts have traded so far in the session. What does that say? That says that this is the price that it's done this the most, right here, in the whole damn day. So what are the probability of being taken out, depending on how tight your stop is high. Because here's 33.50 and this is 19. So that's more than your stop from here to here. And then again from here to here. That's a 3-point stop. That's with my risk neutral trading setup. That's within the stop range. So that tells me I'm putting my stop in harm's way if I were to take a trade out of here. Second of all, the trade for the day has been up. So that would be a counter rotation trade unless, you unfortunately never know if the context has changed until after it has, right? There's the old, I'm trading along. I'm trading along till they don't work. Something like that. There's sayings like that. I'm going long till it doesn't work anymore, or some kind of thing like that. Here we've traded this pull through several different times. We've taken 490 out here. We got 100 out. We got 2 out. We got no buyers coming in here though, really. So nobody to take it back over there up towards this value area or IB high or points north. So my Boomer likes to short personality is all excited, but it's not in my wheelhouse for a trade to take. So I tell FOMO to go screw himself and hide, or, whatever, however you want to personify those emotions. And I don't take the trade. Plus, I've also discussed breakouts. It would be a breakout trade. And I don't do that because it doesn't work out. And I'd love to say, a breakout would be another, it's like a Vpoc migration. It would be it's a real obvious setup, right? And how can you miss it? So by that context, it's real valid, and it could be a real valid setup, providing you can figure out the parameters and you properly capture the data and you properly analyze whether it has an edge or not, i.e. it's vetted. I'm not sure what that word stands for, but it's a vetted trade. So it has been properly analyzed and determined that you have a positive edge on a breakout trade with all the parameters that you have determined around that I have determined around that. And it would be great. But so far, me just taking them, at the moment, as I said earlier, the code for a breakout trade for me is an error. It's an error breakout rather than IB high, IB 30, Vpoc migration, whatever. The different trade names or trade setup types that I have that I code my journals with. So this, and here would be a breakout. You're looking for lower in a very up market. That doesn't bode well. Maybe this is the space for a asymmetrical entry, but you're real close to the POC. So where are you going? You going from here, which we didn't get to yet. You going from here to here? That's pretty dumb. What's that, 2 points? That's not in the wheelhouse for range. And by definition, your first target, mean reversion, that's the mean. So that's your target. That didn't work either. There's a low volume node, and there's this charming fellow here. Our old buddy, the bracketing algos. Really love to know what those guys are doing. I know it's not important and it's just a visual annoyance, but as I said earlier, I can't believe they're just doing it for the hell of it. There's got to be a reason that anybody with the capability to put on 300 to 1,000 contracts in the book has got to be a serious, substantial player, and that they have got to have I don't believe they do stuff without a reason. And I don't think somebody goes, "Hey, I got an idea. Let's, won't this be fun?" I don't think so. So I'll be always curious about that till somebody figures it out and tells me. And now if we trade into this low volume area here, what do we got below us? Well, we've got VWAP down here, which is a likely target, and mid, and developing value area low. We have a previous, this is that previous Vpoc from which we migrated higher. So quite possibly we'll trade down to VWAP. Is the context changing then? Is the context changing? We're coming through this low volume area now. You can see how this presents on IRT. There's that low volume area we just traded to right here. And here's our VWAP. This is the full session VWAP. And point south. Like I said earlier, you don't know when the context has changed until after it has. I'm assuming that this VPOC here and this previous POC, which is now aligned with the VWAP, is a pretty important level. We've tested it a couple of times. And if they get down through that, the mid and yeah. I'm still hesitant. I would still be hesitant, even though my preference is to short, to be on a short in this area, because I don't really have any. I've never vetted that trade like that. There are TLab. There's a couple of TLab setups. Similar to that, there's the VWAP VPOC trade, or mid VPOC. So if they get down around here, which is a Vpoc migration, is this still too low? And then they rotate back up. That could be for some a valid trade setup, but it's counter trend or counter context. Actually, no, it's not. That would be in context, because that's going with the direction of the day context, right? So this VWAP to VPOC would be taken along back up there, and this could be an arguable price check at L3. In other words, they come back down to see if this previous VPOC is still too low, and if it is and nobody wants to buy it, then they head up. I've got all kinds of crap going on in OBS I don't understand. Now the chat's saying I need to sign into chat. I don't know. I thought I automatically did all that. When I turn this thing on, I'm going to click this and hope for the best. I'm not doing that. Why I'm not automatically signed into that's kind of silly. But if anybody's chatting with me, I'm sorry, it's not working on OBS side, and I'm not going to open up another browser with Studio on it at the moment. And I doubt if there is. So and I smell breakfast, which is a real good idea. I'm going to mosey out and have a look, see what's going on out there.
go. What happened? Good breakfast, by the way. Well, we got right down here to where when I left. We didn't test down to the VWAP, but we did rotate back up to VPOC, and it's worth pointing out that that's 11 points. That's what happens when you get to scale too tight. Come on. So this 11 points, right? Not a structured trade or anything that I could say, even lie that I was planning on. But a lot of great opportunities today in the direction of the context. Not a vetted setup for me here lately, but that doesn't matter. See this, we didn't test down to the VWAP at 04, got within 5 points of it, and this iceberg, up she goes in the direction of context. So that's the bond auction, apparently. That's the only other thing that was happening, if I'm not mistaken. Let me look. That's the wrong freaking day completely. Hold on a minute here. Wrong thing. What the hell happened to that? Maybe I didn't even open it yet. I must be losing what little teensy bits of my brain I used to have. I think I must have lost somewhere along the line. Of all the things I miss in the most, of all the things I've lost in my life, I think I miss my mind the most. So yeah, 30-year bond auction at 1201. We just are had whatever. And then the Fed balance sheet at 1530. So that's it for the newsy woozy. The reports for the day. And I'm guessing the bond auction was something. I don't know. We never traded treasuries or bonds. I don't quite understand. It's kind of like options. I think you got to wear a big pointy hat with stars on it in order to do that. Change your name to Merlin or whatever. Seems like they want to go lower with it, however. Now, they may bring her down to the VWAP, which would be kind of an understandable thing, I believe, because of the definition of it is the volume weighted average price, which is supposedly is something that the higher time frame does look at and trade off of. So yeah, baby. Yeah, well. These little overnight trader, these ETH trades early in the evening are kind of. I'm standing here thinking, well, I wish I'd have. First, definitely wish I'd have been focused, not preoccupied with the other stuff, the meetings, whatever, and been able to take advantage of some of these large trade swings that I've already talked about. But it is kind of nice to have 30 or 40 ticks in the bank when you wake up in the morning from the evening before, which is technically today's trade, right? Because it is in this, it's this ETH RTH cycle. Look at that, boy. Where's that level from? Got somebody put a lid on it at 15.5, or what happened there? What caused that? Well, that might have. There's a bunch of consolidation right here, and we've got this VWAP here and the micro composite down here, the VPOC. I guess they could go down there and have a look at that. I'd say they're going to come down here and tap the VWAP myself. Traded through this little bit of volatility here. And interestingly enough, now the bracketing dillweed went away. Maybe it was just because my program hadn't updated or replotted. It looks like they're back now. But it's maybe it's just because I had it wound in too tight, I guess. I was going to say, it looks like those dillweeds went away. That would be nice. Something that's, we're just talking here about data levels and things being accurate. One of the things that's kind of handy about the setup I've got, the way I have it, is VWAP, for example. This line is VWAP drawn by bookmap off the data. Granted, it's all off the same data, but computed and drawn by bookmap, right? And this is also the VWAP for the RTH session. The flag here is pushed by IRT. So if I were to jump over here, I can see that my VWAP of IRT, which is right up here, is 0.5 quarter, right? And that's what I got over here. So it kind of gives me confirmation, and also something I didn't point out. This lag column up here will tell you when there's any kind of a data lag starting to happen coming into IRT. Down here on bookmap, they don't do it. They have a little graphical goodie down here. There you go. That'll start either yellow or red bars will come across there if it starts to choke. There's just a couple of little, I suppose I'm anal about it or whatever, but if I think my equipment or my technology is not working right, I'm off trading and trying to figure out why. So I guess this comes from years of doing stuff like flying airplanes and things like that. You got go, no go checklists and stuff and whatnot. So if I know that my data is, bookmap can't, for a while there, big problem with bookmap, couldn't keep up. This would just go solid red down here and the thing would start throwing lines up and choke it completely. I went back and forth with support and they determined that it's two of their indicators, which they're trying to fix. Not only happened to me, but I guess I might have been the first one on it in the traders lab. Anyway, so yeah, when that kind of thing happens, I just don't trade. That's it's a business, and I'm not going to put money at risk in my business because it's not a game unless I know that I have. You spend a lot of time and effort, a lot, developing capturing the data, doing the computations to determine that you have a positive edge. And then you blow it out your butt by trading when your system's not right, or when your data's falling off, or, rhythmic's dropping in and out, or whatever it is. That'd be like the casino spending all the time they have in all the years developing the edge and the rules around 21, and then playing a game with half the cards in the deck. I mean, just stupid as near as I can tell. Or not stupid, but foolhardy or not businesslike in my opinion, and it's just my opinion. Right? So there we have that. Well, they traded down there a little ways and couldn't get anywhere below it. Now they're back up at the POC and trading higher again. So, they had all of this consolidation here on the open. Wait a minute, not on the open, but consolidation here. Vpoc migration up. Consolidation, test, consolidation, trade up. So, that's looking like a pretty viable area. At 13, there, whatever it is here, let's see. Around that 9 area here. And here was 119 out, trade up, and where'd they come back to 9? By definition, I guess that could be considered exhaustion or, stop divergence. Plus, there was an iceberg here, picked off 66 of them, 4 trades. And then buyers stepped right in. So if you're fast on the trigger and not talking or looking around, that could have been a
mean reversion trade of a sort from this low volume area back to the mean. Now up to the low volume area and back to the mean. There you go. For me, it's kind of dicey, like I said, because it's in outer space, right? There's no, well, there was this little dribble of liquidity laying out here, but that's gone. And with the VWAP so close below, I've already explained my thinking there. But I'm real comforted to know that the Algo boys are back. Not. I wish I could figure out what the hell is going on with this OBS story and why I'm not on the right window. But yeah, what I was talking about was traded down here to 19 and then up and back to only 9 stops, and then the buyers kept in, and there's not a seller hit the market till here. 10 points, 11 points. Those are the kind of things that I have to be more, I've got to be quicker on the trigger or faster on the decision and recognizing it. That's why being in the now and narrating as you go. Tom has a saying, if this, then that, if not, then what? Claims he continually is going over that in his mind. So come down here. Okay. So they don't get any lower. If this, then that, if not, then what? Well, we trade up and we pull back to here. Now we've only got 9. That's divergence. Are we going to get more sellers in here? No, we got buyers over here. So you hit into it and then up you would go, assuming it's figuring that you were looking at this level here when your buyers re-engaged. I think is the right way to look at that. I didn't, of course, but I mean, I didn't take that because I didn't recognize it in time. Not focused in enough on the market. And so far, no shorts in market today. or I'm not, taking any shorts, longs only. And I haven't taken any trades in the RTH session, so to be clear. Now this stream will, no, it won't. It's going to say this stream will stay up because of the trades, but last night's ETH trade was already posted and stopped. This stream started at about 0800 this morning or thereabouts. So typically what I'm doing, unless there's if there's trades in the stream, then I post it up and put in all the timestamps. But if there's not a stream, I just make it private rather than public. I'm also thinking about, I think I might have said this earlier, I'm thinking about having shorter streams around, so there's not just hours of dead time. Like if I'm going to be away, for example, this morning, stop the stream if I'm going to leave here in a few minutes or whatever. Let's say the bottom of the hour, stop the stream. And then when I come back in the office, start the new stream, start another stream that would be for that time period. Like, so this would be RTH morning or RTH afternoons, or I don't know, something like that. It's kind of over. I sure as hell am never going to sit in less than 8 hours of airtime. That's why I'm trying to be so as accurate as possible with the timestamp deal, so that I can, and myself or anybody can actually use the stream. For example, this would be the timestamps. Assuming that I trade today, this would be the timestamp so far today. Not from here down, but from here up. And then I push. What you do is you then take this and put it over into the description of the stream, and then
YouTube takes these numbers, and you have to have one down here that says stream end, and then YouTube takes all those numbers. That's why they have to be in sequence and puts the chapters in. And look at us go. Continuing to that upside, longs only. So that'll be a regret. There is the mean reversion trade. So let's analyze this. There's your entry. There's your scale. There's your target. You got your helmet on. And here we go. And you're up 32, say 12 to 32, 20 handles. $1,000 on a one lot. If you're looking at money, not including the scale, which is another 150. So $1,150. $1,150 on a one lot with no heat. I don't know what you do for a living, but I can tell you that I don't get paid that much. And well, here's another one. 12:07 to 12:20, 13 minutes. I don't make 13 minutes. Let's call it 15 minutes. And let's call it $1,000. I don't make $4,000 an hour. Pretty good wages, though. And that's realistically trading without gunslinging and with a two lot. Risk neutral with a two lot. So from this point in your trade, right here, long at 12, say, and there's 15. So from this point right here, you're risk neutral. The worst you can do is scratch. Instead, you're going to be up about $1,200 with no heat. I'd say that's conservative, realistic, risk management focused professional trading as a business, treating trading as a business. That's the way to do it. Now, these guys that are trying to pick the tops and trade with 10 contracts and all that stuff. Okay, sure. So if you were trading with 10 contracts and did the same thing, instead of $1,000, it would be $10,000. But it's also the side of that coin that they never talk about is the loss. And everybody takes a stop. If somebody tells you they don't take stops or they have a 100% win rate, just shut your computer off, click your mouse, turn around and walk away, whatever it is, whatever situation you're in, because that is complete BS. Everybody takes a stop, always. The only people that are involved in the market would be broker dealers, because they're just making the spread. They're taking the bid-ask spread. So they can't lose any money. They are not taking a position which would have risk exposure. Oh, wow. I'm so disappointed. I was a good breakfast, but I kind of wish I'd have been standing here. What the hell was that all about? Sometimes I see this mic thing flying around. I guess it's just from walking into the room or picking up the headset or I don't know what. Wow, so look at us go. New all-time highs for the day. Continuing to push higher. So, yeah, I'm really glad I didn't take any of these long. And I want to be the guy that says, doesn't admit to rear view mirror trading, but says he took that IB low. That would be the one. And I'm suppose there's people out there that have. One of the bigger problems, I think, with a lot of people is, and myself included to a certain extent, is that, just letting them run, right? That cut your losers short and let your runners run, or however that, or winners run, or however that goes. And that seems to be a problem for a lot of people. And I wouldn't say that I struggle with it, but let's pretend back at this original trade I was talking about, where we got long right here. We got scaled right here. We got long here, scaled here. And now we're sitting on it, right? So how are you managing this trade? What I would normally do would be, obviously you're already scaled. So after I got past here and we had a beat test back down and started up, I would probably manage up to below POC by trailing stop. Then we swing, up and swing down to here and take off. And we've passed this swing high. I'd bring that up to here. And then similarly, we trade up, we pull back, we trade up past it. I would probably manage up to here again. This is just stuff you got to vet for yourself and see what works out. That's why having some way of programmatically doing backtesting where you can do these various scenarios is really important. IRT has that functionality kind of, and you get a real in-depth reporting from it. But setting up the coding all the options proved to be more than I could figure out. I mean, I would have it running once and then for a while, and then it wouldn't work on something else. And I went to support, and the new support, since Chad's gone, I find it less than helpful in the support. Eddie is now the guy that does the support, and he said, well, that's really tough to do. And the thing the reason I went to support was I coded exactly the example from Chad, and it didn't work. So what that told me was that they changed something in an update that broke that. And then Eddie said it was a real tough thing to do now, and what. So, I'm looking for another way to backtest is the short answer. Look at this thing go. Now I'm starting to feel like a big old butt. Any of these tests, this one would have been an excellent long setup here, testing the value area high. We come through it, we pull back down to the value area high, we get 37 stops out. We come over here to like a 1 or a 2 or whatever that is. That would have been a long, valid long. Okay. In my view. And we're in the noon hour, the lunch hours, 12:31 Central. Damn. So disappointed in myself for not
maybe the stream is not my help. Maybe my consciousness and my focus is more on talking and articulating this stuff than it would seem to me that it's the right way to go, because if you're talking about it, you got to be aware of it, right? But I don't seem to be picking up these signals up, and certainly haven't traded them. So, yeah. For example, I was in the room here. I was standing here, but I didn't pick up on this pullback to the developing value area high and then move off. Not saying that this is a mechanical trigger, but this pullback to nothing certainly would be a good example of exhaustion or divergence, and then buyers all the way. But so say you got in here, well, that really wouldn't have fit the criteria, because it's not 3 points to the value area high, which is a definite level obstacle. And at that time, was the high of the day, I think. No, high of the day was over here. Yeah. At that time, this was the high of the day. So, yeah. And look at this shit. Now I'm going, ooh, breakout? Did I say I don't like breakouts? This is where the FOMO starts to trigger when I see this. Especially when I've missed this pullback. And here's another little one. So we're getting to the previous RTH high, which is right there at 55%. So if I could get a pullback and get on this thing for that, target that previous RTH high, that would be nice. One of the problems with a lot of traders, and myself included, especially since I guess my preference is to short. How do you get on these continually up-moving, trendy type of days? So is this going to be a pullback down here to this consolidation? I'm always leery that we're going to have one of these deep pullbacks down here to the value area high or the developing value area high, where they take another run at it. And it is 12:30. It's the lunch hour, which used to be light trading. And all you really need to have is be in a position where you're going to get scaled. Then it's, pressure's off. Here we go. Answering my question, I guess. So my thinking here would be to find a get on spot, which I hope this wasn't it. Where we are going to trade up to toward that overnight high. So we got some buyers coming out of here now. Damn, Entering here would be no good because your stop's right in the middle of traffic, right at this iceberg. And I don't see. There was 8 down, traded out 6, traded 135.
word of caution if you're going to initiate trades with a keyboard, as I do. You have to click on or select the bookmap application window. Otherwise, you'll be mashing keys and nothing will happen. I found that out a while ago. Of course, if you're trading with a mouse, when you're on the window and you do the click, so that's not a thing. But there we are back at 40, so we're up at 44. That pull up would have been scaled. But this looks kind of wishy-washy here to me. I do think that we're going to go for that high and that previous RTH high before this is over. And I'd like to be on that trade, but I'm not sure. So they still slopping around here? Yep. Yeah, well, pretty glad now. Sorry I missed. Now we're here when I was talking about earlier. And here we are kind of doing this one here, I guess. Among other things I'm leery of, the 12 to 1 area is definitely one of them. And oftentimes there's good movement. Obviously, if I'd have been over here, that was good movement. Scaled and helmet. But to get into something here, with the possibility of rotation down to this low volume area, and of course, up here is a breakout, not going to do it. The premise of the trade could be exactly right, but the location of the entry and the resultant location of your stops is got to be one of the bigger problems, I think. Going. And that's what I was talking about earlier to do with the breakout story. If you're up here and you're thinking it's going to be a breakout, you hit that where you stop, right in the middle of all this crap. So, bad idea. The question is, which is worse? Which is has a higher percentage of follow through? Whether you take an entry off one of these lows with these value areas and this stuff below you, we're kind of in thin air out here. Or do you look at this as a mean reversion? Take one of these lows and target higher. For sure, your stops are in a better location if you're long down here because they're out here in space. This, if you got a long in here, 40, 37, your stops haven't been in play since this big move up. Now, it isn't back to 40 yet. It was right here. That was probably the entry. The pullback, washout, quit, 10 up, or better yet, 4 and up, I guess. And at some point, they're going to take that eye, I believe, and go for the previous RTH high, would be my guess. But that's just an anticipation or a guess, right? And maybe it's going to happen right now. Well, this consolidation is they're certainly winding up the spring, huh? Look over here. Come on. Winding up that spring. I don't know about those things much because I'm not a pattern person. But I think that's called a bear flag, isn't it? Where you have higher highs or highs stay the same and higher lows. As I understand it, if it's bear and then it kind of tips up to the positive, it's called a bear flag, meaning that it's going to likely break lower. I don't know. I mean, I got no clue, but I think that's how it goes. Somebody probably knows a lot better than I. What I think is going to happen over here is that we're going to get these icebergs are moving up below us. We're not going to get that pullback to this low volume area before they run for the RTH high, or maybe the previous RTH high. Like now, for instance. Well, ooh, breakout's country. So that was probably the last, what I would consider to be bona fide opportunity right here for a long. And so in my opinion today, there's been no shorts. And there's what happens to you if you take the breakouts, right? So you take this breakout, you're in here somewhere at about, say, 46.5 and pretty close to a stop. Sweating bullets for sure. There you go. Stopped. Is this the bear flag in action? I'm going to wait to see if we get down here. At least if we get through this iceberg. They've been sitting there a while. This T means that it was detected, I think, or trade was detected there, if I'm not mistaken. And now it's still sitting on the iceberg over here. I'd love to take it long for this new high of the day and with my target, as I said, right there, the previous RTH high. But I'm not, I don't have any specific setup or anything here other than, what is this? The closest thing to a setup that I would recognize is this mean reversion outside in. This means we got to get down in here again. There's a TLab stat called 12, or setup called the 12-to-1 stat. I really don't know what it is. I got to look that up. It's something about if there's a criteria whether we're in a rotational or trending day about it, though, I know. Something about over the 12, and the high is taken out over the 12-to-1. 12-to-1 high is extended or something like that. One of the things I'm trying to be conscious of is not trying to look at a bunch of different setups at once, right? Identify what I think is the best one. Vet that trade properly, as I described in way back in the trading as a business around 26 minutes in, and then focus on that one trade. And see if all of this stuff, which I believe to be the case, and which I have every reason in the world to believe is the case, is true. Is true. I believe we're going to have a down move before we have an up move. That's what I think is happening here, and that's why I'm not hovering over the keyboard at this levels. I think we're going to test down here into this low volume area. This is where I want to go to trade up. We're having, if you want to be real technical about it, we're having lower highs, lower lows. Does that mean anything? That beats the hell out of me. I can see where it does on a grander scheme, whether in this small tight of a fractal, I don't know whether that does or not. And maybe this was the low. This was the place to have gotten on. I don't know. To be honest about it. Almost tempted to put a resting order down here. Excuse me. Try to get my stuff organized here a little bit. Try to put some trades. I guess I could just do this. Some packets here. I mean, some things I have here, but I didn't catch the time on them, so I don't know what to do about that. I guess I'll just slap them in here at, maybe put them in here at 4. I don't know. Talking about the importance of entry location. I think that was relatively recent. Forget about this stuff. And continual stream of opportunities. I know I talked about that, but I don't remember when. That's where these timestamps become critical and where I don't do very good. Well, so we're trading back and forth around this
area right here. And I'll probably regret not getting on this right over here. And here we come up to the 1 o'clock hour, and they'll probably bust it higher for the where that stat goes. I don't know. Oh, there we are at 1 o'clock. Let's see what they do. Let's see what they do. Almost tempted to put a resting limit down here. But you need to see what kind of, if it gets down around here, you need to see what kind of action there is around that. So I don't know what this jerk is. I'm not sure whether this. I guess this guy is just sitting on 32 contracts at 41 half and is going to sit there till somebody trades into him, I guess. These are icebergs. These are stops. The indicators that we're screwing up on Bookmap is the stop sweep and the absorption indicator. The absorption indicator is kind of disappointing because that was a pretty good one. And maybe we got down to my low here. I don't know. I mean, if you stop and think about it, all these people along here that are looking for the pop, all the breakout traders and all that crap, they've all got their stops living right here. So one would suppose that when some high time frame guy comes back from lunch and wipes the mustard off his face, whatever else, he's going to look at this and go, "Oh yes," just hammer him. And I maybe just have my timing completely off, and the buyers are going to hit, and up we go. You know, 103 of them just hit right there, but it seems to have been absorbed because they didn't go anyplace. The sellers absorbed that 103 contracts, and they're coming back down. So when you get buyers buying and not going anyplace, or vice versa, not getting paid for their trouble, that's typically a bad, a sign that it's not working out in that direction. And I would be so pleased if I were sitting on a long, as a lot of people are in the TLab for sure, with their helmets on, have their scales, and they're sitting there with the helmets on, getting all excited, anticipating that previous RTH high as a target, as they should be doing. And this is where I start getting excited about, and the FOMO bug starts to, the breakout bug starts to go. It's like, ooh, it's going to go, it's going to go, it's going to go. And sometimes it does. That's the worst. That's the worst trade to win on because it reinforces what I believe at this time in my trade plan is negative behavior. So this was a good opportunity. Funny, there's not more stocks there though. Because for all of those guys that were, for all these stops that are the breakout guys down here, there's all these people that are shorting this crap or buying all these things. All these guys are selling in here. That's why there's buying and going anyplace. Now it may just start to run, and in that case, I have to decide whether I want to just jump on and try to catch a run, which is almost a chase. That pile of liquidity sitting here at the number. Looks like I missed it. Disappointing. So now we're 50 to 58. We're going to go up there. We're going to pull back first. What are we going to do? Really don't know what to do here. And so if you don't know what to do, what's the thing to do? Stand by. Disappointing though, because watch this for all this time and I should be on 10 points right now. See, from here up. Instead, my target is becoming increasingly close. I don't know, this delta maybe was some sort of a level here. Some sort of a line in the sand. We got a little high volume node right there, a little consolidation right there. Back to the top. Well, and do you see how disappointed I'd be right now had I said, given into the, so take it. I don't know quite what to do. Had I hit into that yes, I'd now be stopped out and gone, man, how can I lose money when all these people are making money? This, however, might be a time to go higher. Didn't catch that very well. 43 to 51 or 48 to 51. That's the scale, right? So getting in here to there would have been the scale. This algo moron is coming back down here, which I still haven't figured out. This consolidation, when they wind up like that, that's like coiling up a springs. It's going to pop one way or the other. And the big question is, which way? And this price action with this lower high here, and it's kind of indecision around this previous liquidity, puts me off the long. Don't know where I'd be put back on it again, though, is a problem.
Make sure that I'm on the right window, so if I do initiate a trade, the damn thing works. That's so frustrating. And I'll key it in and it doesn't go anyplace because I was busy typing something in the stream thing or whatever else. You know, and after 5 hours of this stream, and not to have had a trade with all this opportunity, I start to wonder if I'm just getting bored, desperate, or some other psychological boogaboo is trying to get me to justify things. You know what I mean? Justify an entry or a position. I don't know. And it's certainly not out of character for me to not take a trade all day, especially when I have a busy other world. Today is not that case, but and so these days when I do have the ability to stand here and focus, I try to be sure I can do that. Right now, I don't see any reason for this, actually. 50 is the big point here. If we clear it and can get going, that's one thing, but it will pull the other way. Always got something positive. Build a wall around it. You got to build a fence around it. The question now is to find an on spot where you can get scaled and then let this play out. But whether it's going to, the scale is the huge criteria, right? I guess this small area here was the good low volume area to have been
to get aligned with. Now it's a breakout idea again. That liquidity's been sitting in there a while. 1,074 contracts. Yeah, 1,051, 52 contracts sitting right here. Somebody's defending the hell out of that. Must be a strike, I guess. Typically, when that happens, when they blow through a big liquidity like that of over 1,000 contracts, you get continuation. But really trying to resist this breakout ID, even though I want to get up there to 59 pretty bad. Pretty bad. Whether these pullbacks are shallow enough to warrant getting on a trade is something I don't know. They're thinking about it, but I don't know exactly what to do. So there's 1,000 contracts sold there. So those guys are now, they will now make a profit by going lower. The people that sold to these guys make a profit by going lower. And of course the buyers, need it to go the other way. Don't seem to be getting a lot of action off of that. These guys don't seem to be getting paid, right? Which one would assume then that they're gonna. And if price gets down here, how far? Where would the stops be for this? You're going to have 1,100 contract puking. So it's a puzzle for me. And as a result, I'm going to take a bio break. Oh, what happened here? Down there. Now I guess we're going to go up here and, damn. Damn Shazam. They're going to just fuss around till they get up there to that trade. And I have missed a couple of 3 opportunities to get on, apparently. Here. I'm a little apprehensive to do it at this point, even though that's 6-7 points to the target. I imagine they're going to pull it down. Well, I guess I imagined more or less correctly. Because these 1,000 guys, these 1,000 lots over here, they haven't gotten much profit, right? They're not getting paid much. There's no real selling going on either. But these guys aren't getting paid a hell of a lot. So what's going to happen there? They're going to whoop this thing back down. Maybe this low here at the 50s was a get on spot. I don't know. I kind of have in my mind that they're going to do something a little more drastic before they take it up there, but you never know. And that's how it works. So there's 53. So had I gotten on right in here, I'd be scaled. And again, I think that's really that's really the secret to the whole thing is getting that scale off. And then, then you essentially don't care because it's risk neutral and the worst that's going to happen to you is a scratch. So had I taken my own eaten my own dog food any place along here, but I didn't know that, right? And even here, as this burned through, they traded it up. That was the scale. And we may continue to go there. Right now, we've got a zipper building over here. This consolidation was just up and down and up and down and up and down and up and down, same as we had down here. So, winding up the spring. Now I'm running out of I'm actually running out of range now. We're up in only got 5 points to the target. It's not that we're out of range, but it's reducing. The range is being reduced. The profit potential is being reduced. And I don't like the looks of this right around here, around 54. Seems like we got to get, I was really looking forward to this low volume area and then rotation, but we don't seem to be getting there. Seem to be getting there. I'm still worried about this 52 level where that bunch of buyers hit in and they're not getting paid. Neither, there's no selling going on either, but something's happening. Not sure what the hell it is, actually. Well, we're getting down to puke country. The pucatoria, the vomitorium for these longs over here. All these guys, this 1,000 lot went in here and they're not getting paid, right? So one would expect that they've got some stops around here someplace. Maybe here. Are they gonna puke? Looks like so. Well, now it's one thing to anticipate that move, that there was going to be, the buyers weren't getting paid and that there was probably going to be a sell-off. It's another one to have the conviction to make money on it by putting on a trade. And I didn't do that. And maybe they'll take this up now. Who knows? 41 to 43. Maybe they'll bring it back. Who knows? Or bring it right up here and then go the other way. Maybe, this could easily signal the change in context, which is, if I'm not mistaken, let's look at that. But I'd be focused on both windows at a time here if I can do that. So let's try to look at what happened the last, come on, man. Last day or two. Well, down, up, straight down. Okay. This is all the way up and all the way back down. All the way up. Are we going to go all the way back down? That's what we don't know. Right. Do we? I don't. I wish I did. That'd be pretty cool to know that. And here, once again, I couldn't, this would not be an entry because up here somewhere's, even though this is a pullback, where would your trigger be? Here? because any trade placement around here is going to be, you're going to have your stop in the middle of this traffic and this big distribution here. Whether this is the spot to get on and take it up to the next one, I don't know. I really don't know what to do here. We just don't have that. So we pulled back down through this level, developing value area high, traded out, buyers in, sellers tried. We only got one stop. I guess that one or this one was the get on board location. Would have been scaled, no problem. And then looking at higher ground or whatever. Is that the similar thing that's happening here now? We got 27 out and now we've only gotten one. So that's going to be exhaustion up here and we're going to go down. Look at both sides of that coin, right? I'd like to take a long towards that RTH high and the previous RTH high statistic, but I'm, at odds about that. And now the further and further we get away from value area high, the less likely, the more likely the stop's going to be in a bad spot, the more likely for a bad entry location. The more likely they are to come back and test this area, for example. Now, if you got in right here, where's 3 points? It's right here. So there's your stop. Yeah, I guess maybe I've just... It's a lot more fun to just be a video game scalper because you spend a lot less time thinking and a lot more time clicking and having high emotions, but it's certainly not the key to having trading as a business. And that's why, if that's all you really want to do and you enjoy that and the rush from it or whatever else, get one of these cheap combines and trade the shit out of it. Cost yourself $20 a month and, just have a lot of fun. Just have a lot of fun. And it's like, what's that? A couple of coffees a month, right? And trade it when you feel like it. Trade the shit out of it, I hope that this test wasn't where I should have gotten on while I was busy talking about trading the hell out of it. There's 3 points. A good reason not to take a breakout. Oops. A good reason not to take a breakout. Sorry, I had it on the wrong damn window. I don't know why it's doing that, but. Yeah. I'm thinking this is a little too jumpy for my even the if then, if this then that, if not then what? Okay, so what are you going to say? If this goes down further, then we're going to target down here. If not, then what? We're going to go up here. I mean, I'm not sure that helps me that much. I understand the concept and that to keep you in the game and keep you narrating, but what is happening now? Lower highs, lower lows? I think so. If you want to look at it on the grand scheme, you got lower highs, lower lows. Yeah, close. I'm thinking about taking the next pull down long and just seeing if I can get the scale off. The high of the day could be in, that's another one. So could the low as far as that goes. A lot of flukiness here looks to me like 16, 20 contracts. And all these little up moves, with no volume behind them are always gives you a goose. And these sellers, I suppose these are the longs puking. And you never know. This is delta. So this is more sellers than buyers. Typically, any of these longs got to sell to scratch, right? So how many times have we hit that level before we're going to go through it? Huh. Well, I need to refill my water bottle and hit the bio break station, but I don't want to. I'm enjoying watching this, A, and B, if there's an opportunity presents itself, I don't want to miss it. This stupid thing keeps doing that, which is irritating. Whoa, baby. Well, I'm sort of at that level where I wanted to be for a trade at that low volume area, but this is looking kind of shortage. They're having a shortage here, shortage of buyers. My intention to have a relatively brief stream this morning has wandered into now we're at 6 hours, so I guess that's out the window. I guess. Well, I would assume we've got to get over about 42-ish or 3-ish. This area right in here. If we're going to get any place, we got to get around the curve here. If we're going to get any place higher. And I'm running out of, I mean, I'm at a loss for an idea about where to go long, which I do still think it's long, but maybe not. I don't know what to think about this here. This consolidation zipper over here. This zipper over here scares me. Those are real sucker plays, I think. And it'll pop one way or the other, but is it gonna drive down or is it gonna drive up for that high? And don't forget that's only 55%. That's a fairly remote statistic, and we've taken a whole lot of other statistics out of the market today. Well, they're trying to do some buying, but they're not getting any horsepower here. I like to buy that. Of course, the place to be doing that is down here at the bottom to get the stop out of harm's way. And they would be scaled. But those kind of this prolonged zipper is not particularly my favorite. I think rather than entering a trade here, I will will not do so. I was thinking that this was a good area. I'm around here, and I'm going to go up here and then take off to the top, but never know what they got up their sleeves. They might have decided that those highs were too high. Yeah, well, he who hesitates is lost. I should have entered down here and then be scaled. And, that's the whole trick. I think going forward, I'm just going to have to start taking these asymmetric trade positions in the direction of context and let the chips fall where they may. They won't be vetted trades because I don't have that facility in place yet. And I'm not sure how you go about doing that with some of these trades. Like, what would this trade be called? Nothing, right? Unless mean reversion. Well, that's one. How the hell are you going to vet that? Which fractal are you going to be trading in? And blah, blah, blah. That's a difficult one that I'd be curious to see anybody else. This developing value area, I could be a substantial line in the sand. I was thinking taking this trade right here, this area, but maybe not. Of course, my stops would be counter to the things I've been saying. Is my stops would be smack dab in the middle of that zipper consolidation. I'll stand by. Rather have no trade than a bad trade. And I don't mean bad trade and then a loss, because of 50-50 chance that any of them will lose. But I mean poor, not sticking to my plan or my execution. And that would have constituted essentially a breakout. This pullback here could have been okay. And I wasn't scaled in, right? So I wasn't even really visually aware that these would be would be scaled trades, right? We'll see what they do here. So irritating. I think I've lost my position. Well, and of course, the second I say that, they dump it back down there. What's the reasoning for why the developing value area high would hold? Well, that's the value area. So they're saying now that value was too high, that the prices were too high, and they're accepting value lower. Yes. Well, so that's kept me out. Logic has kept me out of this trade, which would have had me stopped out up here. Anything down here would have my stop right in the middle of all this crap, which, maybe doesn't matter, but seems to frequently. That's, they seem to go revisit stuff like that. Is this a cup and crack pipe or whatever those old market things are, or chart patterns are? Coming up to 2:00. The power hour. Now, any of these pullbacks, I got to remind myself, entering right in here is scaled. Right? So, yeah. Basically, what they're doing, I guess, is auctioning this thing here. And do I take one of these? I don't know. My thinking is that they're finally through messing around and they're going to go up. So jump on one and see where it goes. But that puts my stop in a bad position and smells a lot like a breakout. And I'm going to be cussing myself when it. Well, there you are. 6 points, 7 points, 8 points. And buyers hitting into it. And I can't short this market, even though it's two ways. Not really my trades, but in reality, long and out of here was within range, and so scaled, and then not to the 48 tick target, but certainly double the scale. So say 24 points ish, which is where I used to have that. But it's not really a crapshoot. What would be my thinking for why to take that trade? First of all, my entry here would have my stop in all this crap. The only real valid idea for that is that it's a mean reversion trade around this bigger fractal. It's not the biggest one because it's not volume. The volume point of control is down here. Which brings me to a good point. Where the hell is the volume point of control? Here, 11,000. So there's it's way below us. Way below us. And they got to get 5,000 more contracts off up here to get this up there. So I'm not looking at a Vpoc migration move in the next. I mean, they can put 5,000 contract. Well, we just saw 1,000 contracts trade out at one level. Or one, you know, so that, there you go. But shit. Well, we're over the 2 o'clock hour. We're officially in power hour. And aren't I glad I didn't go long over here? We're now getting into this extremely low volume area here, identified right here, or on IRT right here. And the market could do a couple of things. It could reject out of there and haul ass for the top, or it could go through there like a hot knife through butter. That's what you don't know. I don't see any buyers here. So that's not a good sign. And how's that going up on air? Having said that, it had gone long right down here. When it bottomed out the second time, that would have been scaled. So I keep saying that because it keeps happening, and I wonder when I'm going to recognize that and do it. The problem with these kind of things is when I see this kind of story down, up and down again, same like right here, I wonder, well, that doesn't look like low to me. That didn't look like the bottom to me. Case in point, right now. And like I said, we're into that low volume area, so they could come cutting through here like nobody's business. And that happened yesterday into the close. They took this whole candle off. This one, for example, all the way back down to here. Into the close. Don't see any buyers. 38, then 2. That's a form of exhaustion, but where are the buyers? Here's one. Used to be. One stop. So what's below us here? Well, the IB high is down there a long ways, but it's down there. Now you start asking yourself why you're not short. So is this a context change and we're going short now? Or are we going to continue to do this crap and sell off down towards the IBI? Too late. I was going to enter. Didn't have the window selected, and now my stops would be in the recent swing low, so that's not good. Had I gotten on that when I first looked at it, that would have been a scale. Now, doesn't mean it's going to go in that direction, but it would have been, I looked at it right here, that would have been a scale, and, now we're going to maybe take off to the top. Who knows? Just keep missing those late on the draw here. Late on the draw. They're 9, 41, 10. Very little buying on the top side. I'm thinking that this is going to at least tag that value area. That's only 5 points, so actually. Value area high. I think I'll set it out. I don't have a good read for this. And I keep feeling like where I'm getting ready to key in is a FOMO situation, like a breaky kind of thing, or like here, right? And now here I'm going to be regretting it because I was looking up here. But, this pullback to the developing value area high would have been a reasonably, could have been a reasonable entry, but it would have put the stop in trouble, which I'm really starting to think is a bad idea. That's, I think, cost me a hell of a lot of money that I get stopped out just because I've got this stop parked in really heavy traffic. And now we're going to take it up, probably. So there I missed out on 10 points. Now I feel extremely bummed out and thinking, well, should I be buying up here? Targeting that high. I missed the break. I should have bought the break down here. Asymmetrically and figured to hell with it. And now I could say the same thing. Should I buy that? You know, we've crossed around this. Oh, we're going to trade up to the next one. So Thomas just said he was a little late on buying this break, and he's long at 36, which is right here where I said, where I thought about it seriously. 36. See, that's 5 points below that. So you're 36. Your stop's right in here. Yeah, I guess it's not too far off. And he's now 10 points in the money and targeting that previous high day. That's the good part. And that's where I was late. Maybe I need to be doing something different, obviously. And it's happening, continues to happen because I don't keep the scale right. This test right here was an entry, and now we're scaled and taken off for higher ground. And now it's just strictly looking at trying to jump on a moving train. That's not a winning strategy. So in, I guess, a move of discipline, I won't get on one. Maybe that's stupid. I don't know. What do we got here? It's 59, 47. Could be 20 points or something. So irritating. So close to being in the right spot at the right time. See whether this works out here or not. I'm tired of standing here, frankly. I think it's reasonably good placement. Let's see. Get anywhere yet, or at least below the swing low. If we can get around this fractal and get some up move here, get that scale off, that will be the most important thing to have happen. Don't need that buyer to be here. Where did he come from? He can go away if he wants to. So let's see here. Okay. Well, I don't like these buyers coming in here very bad. Yeah, buyer. Sellers, I'm sorry. Wrong color. We're not getting anywhere. That's not looking good for this trade. And there's the stop. That quick. Okay, so that was 526. And just here's the part that'll be extra frustrating when it just takes it out to the tick, right? So entry is a 526 all day. And then the first trade out of the box is a stop. Isn't that frustrating? Just my math. Yeah, and they're just going to base right around on that stop. That's the key to trade entry. That's the absolute, I guess it's a good example of how important trade entry is. Let's see. Let's see what they do. My entry was late, but not terribly because I was actually under the last swing down. So essentially, they're just basing out at the stop. Now, there we're getting lower. Okay. Makes me feel a little better. Take the snap for the journal. Okay, well, that's disappointing, but there it is. At least one trade's off. So, and yeah, well, we'll sit here and watch the rest of the day. And look at that, you know. Again, trade placement. Had I gone along here, my stop would have been here, so I wouldn't be stopped out yet. But that's not to say it won't be. Well, what are you going to do here? So I guess they're going to just keep banging it around down here. I'd be a little scared to, not a little scared, I'd be quite apprehensive to put on a long down here again, even though it seemed like that was the way we were going. And just think that any of these longs up here would be scaled. You know, just how trade entry. It's just more of a breakout, I guess, was more actually I allowed myself more of a breakout over this level, but I thought test down here and test up to this level and didn't pull back. I guess I should have waited for the test up and then the retrace, I guess. I don't know. I know you can analyze this crap till you're blue in the face, but this is the reason why having a structured trade makes life so much better as a trader. That is no way, shape, or form is that a vetted trade of mine. You know, and if it was, I would know that eventually the law of large numbers will be profitable. But in this case, it's just basically gambling because you're trying to put together a bunch of stuff on the fly to get a positive trade, essentially. And then there's, you know, now at this point with the trade in and the stop, then you have to, A, you're playing catch up, number one, and B, are you really seeing the market for what it is? Are you emotional? Am I emotional? Am I trying to get even? Well, I'd like to get that stop back. And here now they're going to take it up and probably run it. We'll see right away whether they hit there's my scale. Let's see when they get there. And there we go. Oop, there's a scale, right? So now I'm risk neutral. And if I'd have entered down in here someplace, I'm way past risk neutral. I'm 3 or 4 points, you know, I'm risk neutral and half a dozen, a handful of points into the market. The only thing that can happen now in this time is more of a breakout run, jump on the train kind of thing. So disappointing. So disappointing all day. I thought I was actually being prudent to wait for this level. And, you know, that's what I get, I guess. Well, and it is trading. It's random. You don't ever know which way this trade's going to go. So, for example, if I'd have waited for this trade right here and gone long, same exact trade, I'd be scaled. So, you know, timing is everything, I guess you could say. Yeah, same exact trade would be scaled out and risk neutral. Whether that's going to be profitable or not doesn't matter, but it's, you know, makes a big difference in the bottom line, whether you're scaled or whether you scratched, or in this case are scaled and sitting there waiting for a movement, hopefully up or down a full stop. Irritating. Well, 6 hours and 35 minutes. Bleh. Yeah, that's pretty. It shows you the randomness of trading. The exact same trade and same location and same justification, or clearing this level, was resulted in a scale. Still not a stop, but a scale. Risk neutral. And over here, over many minutes, that is. 15 to 22, 7 minutes. 7 minutes earlier, it's a stop. It's a full stop. Now it's getting pretty close to stopping out right here. Well, that's actually pretty close right there. But it's not. Well, probably is. This thing doesn't draw real accurately. But yeah, you know what I mean? Now it's definitely a stop. It would have, scratched, but been scaled. Oh, there they went. Kaboom. That bummed out some people. Yeah, so they appear to be doing something similar to the other day. $2.30, huh? Well, I wish I'd have been short. I wish I'd have been in my usual configuration. That would have been pleasant. And if you want to really get pissed, okay, this is the stop, right? That's equal to the first scale. So if I'd have shorted right here, it would have just stopped out. No. What am I talking about? If I shorted right here, taken hardly no heat and scaled, then might have stopped, might have not, and could still be on the short way down here. But if I'd have been born 6'5" and a good basketball player, I'd probably be in the NBA. But guess what? I'm not. Oh, look at it go up and down. Doo-dah. Doo-dah. I don't know what the hell they're doing now. I don't know what it's doing. If I thought it was going to fall off, I'd just jump on a quick short for a set of threes and be done with it. At this point, I would be looking to take something like that, fast moves down or up. I'd just be looking for essentially a 12-tick stop, both contracts, and so I'm out flat on that first trade, and then I'm starting back at scratch. I found that psychologically, seems like for some reason, a large percentage of the time, my first scale is a stop. Look at this thing go. They're really selling it now. So it seems to be a stop. So then you're playing catch up, right? You got just one step, 2 steps back and 1 step ahead, right? So that's real irritating. So in other words, if you're going to end up with a typical profit, you got to make double. That's one of the key take-home messages about the risk-reward ratio. You can't, anybody that's trying to run a business like this with a 1-to-1 risk-reward ratio is never going to get anywhere, never going to make it. So that's why I have a 48-tick target and often hold close to that unless it's actually hit. That's why I trail up, because you got to get past that 1-to-1, in my opinion. Well, I'm sure glad I wasn't short. Not. And now it's gotten really fast. But the good thing is I'm not getting any crap down here from Bookmap. The bad thing is I'm at a stop. But earlier this morning, I had a positive trade, so I guess I'm net zero. No, I'm down $1.50 because it turned out risk neutral scale and then scratch and break even. One in the overnight. It just continues to fall. Just grab into any one of these and you're down there 10 points. Remember what I said about the IB? Here we come back again. Now, again, you got to keep an eye on the scale. I need to keep an eye on the scale. So these spots that look like pretty good swings, that's 31 to 29. That's 2 points. That's not a good range, right? And what they're going to do over here now is another story that I'm hesitant to get involved in. Again, this is only from here to here is a scale. That's 3 points. And what are they really trying to achieve? I don't know. I guess they're just trying to trade the hell out of it and catch a bunch of people off sides. Making their money, I guess. Well, this is called Power Hour. The basic cash market closes at 15:15, or essentially 15, top of the hour. There's usually a big flurry and a bunch of, what was that? How did that work? I don't know. See the little guy ticking across the bottom here? That's higher than normal value, but that's perfectly fine. But sometimes before with those indicators that won't work, this whole thing be red and tall bars. So what was that? How did that work? I could just set this crap. And again, this is, okay, you're going to trade this, and what is the structured trade or the setup that you're going to use for trading this? That you're going to say you used. It was high and I shorted it because I wanted to. I mean, it's a lot of volatility. They've traded it almost down to the IB high. I don't know what I would think about this and back up again. There's an iceberg up there of 67 waiting for one trade. I'm waiting. I'm up here. Ooh, hello. He's waving his arms around. In the rearview mirrors, okay, so I went long down here at these bottoms when I had this test, and now I'm 10 points out. And earlier I saw that short drop coming, and I'm shorted there. And, it's so easy to do. Not very, but it's misleading. It's like the pump and dump guys. It's like all those YouTube influencer, whatever that jerk's name is, it pump and dump guys, whatever they're called, Logan something or other or something. Holy shit. I really don't have any idea what I would do trade-wise here. Got the 1, 2, 3 thing going on, the double bottom. Yeah, take your pick. A gazillion different ideas. Delta is weird. It's been buy pretty much all the way around here. I'm not sure whether this column does me any good or not. I don't really look at it much. I'm not sure. Think about it. Well, something's wrong here. We're not at value area high. What the hell's going on? This is completely bogus. Value area highs up here. That's from yesterday. That's not developing value area high. That's value area high. Okay. There we go. Oh, that's the value. The value area high is from the previous RTH period. Developing value area high or low is for the current session. Don't even know my own stuff. There we go. There's developing value area high. And they seem to be going to trade it up. But I'm leery to get in just to stair step into the top, right? But I'm leery to get in it. I'm always kind of apprehensive to go long in the first place, and after being stopped out once, I'm kind of leery about it again. Not back up there yet, though. Not much action either way here, doesn't look like, does it? Not many buyers, not many sellers, just kind of fizzle farting around up here. Getting back to my famous trade location, though. That's kind of obnoxious, but true. Well, there we are back at the top. I'm pretty sure this is where I went along the last time in it and got hammered, if I'm not mistaken. I don't think I'm going to do that again. Yeah. M spot. Now we're still going to probably target that previous day's high. Wouldn't surprise me a bit. We got 15 minutes to the close. Well, and if I'd have gone long at the same exact spot, I'd have been scaled, or almost. I have no clue what to do. I was thinking about taking a long down here, but I really don't have any idea. Oh, God. Tired. I'm sleepy. Didn't get my nap. I'll be all grouchy and grumpy here in a minute. I sure would have thought there was a bunch of stops above this mess, but they don't want to. They don't want to get over there. It's not 83% of the time. It's 55% of the time. I got to say, I don't know what to do here. It looks to me like that developing value area high seems to be a pretty hard line in the sand. And they're getting to that point where there's a lot of volatility. Obviously, you can see that. Now, if you're in a trade already and scaled, it's fun to watch. But if you're thinking of entering a trade and haven't not scaled, well, then it's not so much fun. I don't think I'm going to do this. And I was going to go long, so let's see what would have happened. The minute I say that, here comes a seller. Better that having me said that than having me hit the button. Hit the key. There you go. So 38 up, from 38 to 45. Anyone picked off any one of these lows along here, you're a happy guy. Would have thought a squeeze. I guess they got the squeeze out of the way earlier. Now, 49.50. We got 10 minutes left to the cash close. Wow, there you go. Bam. Gets a little spooky right around this time of day, huh? Kind of thinking about this. Wow. Every time I think about going long, that happens. And I don't hit into it down here in these times like this. That's not a real trade. That for me, that's just that's just gunslinging. I would love to be long from. I think Tom's long. Well, he said he was long from 36, so he's right. He's right down on his on his on his entry. I always try to figure out what they're trying to accomplish. I mean, what would I be trying to accomplish if I was this guy? I think I'm going to accomplish go to the bathroom. Well, so they brought it back up. Well, how nice of them. Back up where they want me to get on along again, so they go back down short. I'm kind of getting to the point where I don't think I'm going to do this stuff anymore today. Well, that developing value area high is just holding tighter than a drum, isn't it? And there should be a whole pile of stops up here. All these shorts up here. They keep going the wrong way, so they keep selling it off. So this thing may sell down, is what I'm thinking now. They better hurry up, or this thing ain't gonna go any place. Even the closing swing trades aren't going to happen if they're not careful here. And I hit my entry and didn't get it order in there. God damn. And there's the Vpoc migration. Wow, that really sucks. Shit. Well, something's wrong. I'm not getting orders in. I don't know what's the matter. It's not taking my orders. I don't know why. Well, that sucks. Wow, that sucks. A big one. I tried twice to get there, and it didn't accept the order either time, and I don't have any idea why. Let's see if there's something wrong here. Go is right. Off. It's not taking the order, and I don't know why. Well, that's really sucks. That really and truly sucks. And there's my target. Well, that is just, God darn depressing. Wow. That's really annoying. Keyboard's working. Well, that's just really annoying. I'm certainly not going to try to. Did I do something over here when I was goofing around with this shit? No, it's activated. Huh. wow, that's just really, really mega annoying. I would have been at my targeted 48. I tried 2 entries with the keyboard and nothing happened. Shit. That's just really annoying. Really annoying. Now, I don't know what to do about it. I certainly am not going to try to enter a trade here or, keyboard something because would be a disaster. But wow. I don't know. I have to go back to the stream when I started talking, but I was hitting an entry here. Nothing happened. Here or here, maybe it was, and nothing happened. At least 10 points out of the, missed out of the market. 40 points, maybe not 40, maybe not to my scale, but to my runner scale, but that's really annoying. Yeah, well, that was just a monumental pain in the ass, but I don't know what to think about that. I don't know how to test. There's a couple things with this. Here, obviously, this is multi-brackets, right? It doesn't work on replay. It's not even here. It disappears. So you have to do something different. You have to, if you're going to trade on replay, which you can do, you have to set it up however you want to, DOM or whatever, and you have to use brackets. And then if you want to do, the way to do it is 12 and 12. And then if you want to enter two contracts, with both at the 12 tick stop and be able to move the second target out, you double click. You enter 1 over here instead of 2, and you double click. This 2 is entered from the multi brackets. So my big question now is, I have no idea how I will check. I'll go back and look at the stream and see if there was some sort of notification somewhere that I wasn't seeing. But that's real disappointing. That's never happened before. I wish it would have happened earlier when I got stopped out. But, I just missed out on 15 points or something because this damn thing wouldn't execute. And my first thought was that I didn't have the app, active, which I immediately changed, tried it again, didn't work. I guess I should have gone over here and just hit into the DOM. But then, here we go again with, what's wrong? Why did that not work? It's like taking off with, 5 cylinders firing instead of 6 or whatever. So let me see what I can do now. If I come down here somewhere, the reason I don't like some of this trading is that whether it's a left click or a right click and all that kind of crap. I know that if you click up in the long column, the bid column above market price, it goes in as a market order. So if you want to put a limit order up there, I think you got to use I'll look at it again. I think it's you do a shift click. I got to look at the different order entry methods. So what I want to do is put a short, for example. I want to put a short up here, and I don't want to get short, but I want to test if the damn thing enters it, puts the trade in the queue. But I'm afraid to do that now. Frankly, I'll play with it tonight, I guess, when I have less to worry about. God, that's disappointing. And I way profitable trades on that closing swing entry. That's just really thoroughly a pisser. I don't think I was miskeying anything. I trade this way for years. I have my number keys set up and my other, keys exactly the same on any platform I use. I always hit them. Oh, I wonder if it somehow is shut off. How the hell you do that? Keyboard shortcuts. Let's see what the hell's going on. Instrument trading. Nope, there they all are. Just like they're supposed to be. Oh boy, that was weird. That never happened to me before. And really, it's magical, I love paying good money for something that does. I'm not saying this book map's a problem. I would be flabbergasted if I was keying it wrong. Unfortunately, I don't have, one thing I don't know if the book map recording shows pop-up windows and stuff like that. I don't know if book map recording shows pop-up windows and stuff like that. It seems like OBS is connecting and reconnecting now. I don't know what's going on there either. Anyway, but the tail end of the stream will definitely show that, I hope. If there's some sort of pop-up that I was missing that says wrong keys or some damn thing, I don't know. Now and I got to figure out how I'm going to test it. Because I tried the keyboard. I mean, I tried the number pad of the keyboard. For example, here's the number keys are working, right? I don't want to enter a keyboard command for a trade because I don't want to enter a trade. Yeah, that's a new one. God damn, and I would have been well profitable over the loss. So gee whiz cripe. That's just one thing, it's another. The joy of trading, huh? I don't see any reason in keeping the stream going on. I'm going to stop the stream now. I will do the deal here and put the chapters in because there is a wow. And I was going to have a second trade profitable. That's just goddamn irritating. I'll tell you. Excuse my French, but really. Okay, so tomorrow,